Here, then your neutral spot's over there.
Oh, is there, do you have a splitter?
I do not.
Test.
That would be great if I did.
Here, he's got a cable there. Here, why don't you sit here instead?
Oh, you still okay? Sorry, man. Sorry for the change this
That's
week.
okay. That's okay.
No need to apologize.
You can do whatever you want.
Just 1 second. Oh, let me make sure my audio's on. Test. Okay. Properties. Record. Good to go. Take the image off. Started recording. Okay. All right. So today's discussion, if you guys haven't noticed the title, Super Bowl alerts. Okay. Well, I'm not getting that. I don't watch sports, but
Super Bowl
hey, welcome.
times of stock performance?
You know what? That is something. I should say that. You believe that?
I don't believe it, but
Okay.
I know there is some.
I saw an article on that. I saw an article on that. I just sent you something.
I'm sure there's a correlation to anything.
Yep.
But,
I know, right?
So let me see. Where was I? Let me make sure everything's good to go. Recording. Test. Okay. There we go. That works. People online. Okay. So today, guys. Today's discussion, number 104. I'm gonna hold back like usual because people don't come to class on time.
Yeah.
I used to be in college, so.
I'll wait on these.
Oh, yeah,
so
yeah.
more people are.
Yeah. We could pass it out like later when when more people come in. I'll announce it for you. For the most part, today's discussion is going to be, I guess, focused on China, but not just China, but digital China. Just because this report released, I think it was this week, on WeChat. And if you guys know WeChat at all?
No.
WeChat is we're gonna.
Chinese version of WhatsApp.
No, beyond that. It's let's say all the applications we have in the market today, like Facebook, like social media, PayPal for payments, Uber for cars, and was it Lime or Bird for bikes and scooters, whatever. It's all consolidated into one app.
So it's
right?
like an ETF of apps. Sort of.
You could say that. Yeah, you could say that. Without getting into too much detail, because I want to hold back for more people to come in. Basically, their economy is extremely efficient. They have a higher mobile adoption rate than us, here in the West, right? If you think about it, they kind of, if this is true or not, they kind of skipped the credit card system, where we went from physical currency to like credit card system to mobile payments. They went from physical currency to mobile payments. Now,
Well, plus they even, in some areas, they even skip landlines.
yeah. That, I believe, that was the other one. So they did skip landline. I think they skipped something else too. I forget. But that to me is fascinating from, not just a financial investor perspective, but just a pure economics perspective, right? It tells me that their infrastructure, at least, it's kind of blurry.
No.
Yeah, their infrastructure is a little bit more advanced than ours, and that's something to pay attention to because that kind of gives you insight into how robust an economy is. But again, we won't start until maybe some more people come in. But you're new?
Yes, I'm new.
What's your name?
Mahmoud.
Mahmoud. Nice to meet you. Okay. Yeah. Welcome. So we kind of meet up every Sunday, and I try my best to bring interesting content as well as for myself to kind of develop myself as an investor or whatever, and also the social network. But yeah, if you guys have any questions for now, we could kind of just take a look. I know you're looking at earnings or.
I was looking at earnings.
Okay.
If you were to table one about Amazon, I thought Amazon's numbers were spectacular, even if they said that their forward-looking guidance was cautious at best. That seemed to be sandbagging, but the stock tanked, even though their numbers were better than expected almost in 10 different ways.
Yeah. So we're just going to chit-chat for a bit, for like 15 minutes. We'll look at some stocks, and then we'll wait for people to come in. But anyways, for Amazon, from what I'm seeing, it's still hanging out. So I try to keep it objective, right? It's still hanging out below the 200-day moving average. If anything, it kind of hit resistance on that right here, prior to earnings. Or after earnings. So this is what I'm seeing right now. Will it go up? I don't know, right? This week was a major week. I'm sorry, last week was a major week. Or still this week. Wednesday. Was anyone watching the markets on Wednesday when central banks, FOMC meeting? Huge announcement, and everything spiked. Gold spiked. Yeah, for the most part, we've been watching gold for some time. I'm still bullish on gold. Let's look at the gold portfolio real quick. Let's see.
ones you recommended a couple weeks ago and see how they did so far.
Yeah, okay, let's go with first is
I mean, I
GG.
got it here.
Well, I have the list, but yeah, we can do it as well. So we were watching GG when GG was all the way consolidating down here. And my anticipation was that it would break out from the ascending triangle. Oh, let me just redraw that right off my game today. There we go. So this was the pattern right here. So reasons that led up to this trade was basically it was trading below book value, meaning let's say it had 5 billion in assets, but the market value was trading at 2.5.
Oh my God.
So yeah, oh my gosh, right? It was at
I mean,
a
that's
point.
a huge difference. It's not
That's a huge difference, and it was a great inflection point for gold miners as of right now, with sovereign instability or uncertainty, right? Central banks, for the most part, have not been giving us clear direction on where the markets are going until probably Wednesday. But even on Wednesday, last Wednesday just now, it wasn't that clear, and we'll analyze the statement, but we'll look at it when more people come in. But yeah, GG is one that we're looking at. This is Gold Corp. This is in the billions of dollars in terms of market cap, 9.58 billion. I'm still holding the calls. The contracts are actually appreciating now. What happened was that they got acquired by Newmont, and Newmont was pricing it below. My premiums, let's say my option premiums were higher than what Newmont was acquiring them for. So, but it didn't look good in the beginning, but now the contract's appreciated, so I'm just taking some. I have to allocate to a different gold position. The other ones I'm looking at is AGI. This one's appreciating a lot. I forgot when we were looking at this, but I would tell you we were probably looking at around November.
That's another gold stock?
Yeah, it's another gold stock. So we were looking at this around $3 down here in November. Right? I held it through here, I believe. So I'm still holding on to this one. This one's trading at a 0.65 of book value, right? So for those of you who don't know what price to book value is, when I look at financials, right, or when I look at stocks, you guys know when I say financial statements, we're talking about income statement,
Yeah.
balance sheet,
Accounting.
and accounting, cash flow statement. Well, you know, these days, like, if you pick up the analysis, you don't really need to look at the statements. I can tell you right now how much assets are in their balance sheet by just looking at the price to book value. So what is it? It's P, price, over book value. What is book value? Book value is the net equity. So all their on the balance sheet, all their assets minus their liabilities equals either a net or not a net, right? So this is telling me right now they have about half of this. So this is their price, right? Yeah.
For the sake of clarity, I used to be an accountant.
Oh yeah.
And
Okay.
it depends on how they're depreciating things, among other things. You can have something on the books way higher than it's actually worth.
Yeah.
Or depending on whether they're doing an accelerated depreciation or just straight line.
Yeah.
And so I mean, in the case you're talking about, it's so extreme, it doesn't matter what they use, they're still undervalued.
Yeah. I mean,
But
there.
in some cases, if it's minor, it could be something like that.
Yeah, so the investment thesis we've developed again, guys. Again, I'm just kind of chatting for people to come in. We're waiting another 10 minutes before we get started on today's discussion. I know some people just joined online. The investment thesis that we had for this gold or gold miner play was basically one is global macro risk, right? 20% decline in what NASDAQ and S&P 500 in November, December, or more accurate, December. So global macro risk, that was in the air, so gold was appreciating. The other one is central bank instability or Fed balance sheet instability. We have basically too much assets. I could give you a little sneak peek of the updated central bank balance sheet that we have today. So this is what it looks like. We only decreased by about 10%, right? So when the central bank's assets expand, that means they're buying bonds. If they're buying bonds, then price of bonds go up and interest rates go down. That's the mechanics of how they lower interest rates, right? But we won't go into that just yet. I need to hold you back. Let me see how many people are online. 9 people online. So today, guys, we're going to talk about digital China, or China's internet sovereignty. That's like a new buzzword for me, internet sovereignty. And how they got the Chinese Great Wall, or the Great Wall of China. There's actually the Great Firewall of China. and it's so intelligent because I'm kind of going into it already, but I was geeking out really hard to it. So basically, if you think about it, right now is with all this new technology that we built, our infrastructure is I don't know if I can say this with accuracy, never been higher, right? Though if you read sci-fi, there are some cool sci-fi stories that talks about, before man, we probably had even higher technology, so high that, the civilization destroyed themselves. But that's actually a video game story, so that's not real. That's Halo, by the way, if you know. Yeah. So
A lot
I
of stuff that's been discovered that makes you wonder,
yeah.
I mean, archaeologically.
Yeah, like the pyramids and all that. So those are things I geek out to, but we'll keep it more finance. But basically, I'm saying that our infrastructure has never been higher, right? Meaning like all these data centers, all these cloud software, all this efficiency that I would probably say a lot of people have never seen before. But yet there are still people in this world who are operating on like Excel sheets or pen and paper when they could really just automate things like a cloud calendar, right? Or like a cloud database. So with that higher infrastructure today, that means our standard of living should improve as well, right? Our work efficiency should also improve, right? So China is amazing in that, as a sense where they have a higher mobile infrastructure, mobile application, mobile technology infrastructure, so they could do a lot of better things in life, right? Meaning one app could get you your payments, your transportation, your dating, your social, whatever. So they're really advanced, and I wish we could all like teleport there right now and just like take a look at certain aspects of life. They actually have a digital hotel that I saw recently. Maybe I could go on LinkedIn and show you guys while we wait for more people to join us real quick. So I'm always on LinkedIn. Reason being is that all these high tech people like CTOs, CIOs, they hang out on LinkedIn. So I love it to see whatever they share from time to time. So I did see something recently. Let's see, that was pretty interesting. Let me take a look over here. Come on. How about this? Alibaba Hotel. We're just gonna watch something fun.
Alibaba's huge.
Yeah, they're huge. They're for sure huge. Tencent. Have you heard of Tencent?
Vaguely.
Okay, so you know WeChat. If you don't, I'll give you the introduction to WeChat as well today. So for the most part, Tencent is Tencent Holdings. They own WeChat. Hey, welcome back. I want to show you this hotel. Let me see if I can find a video on it real quick. Okay, 54 seconds. So check out the futuristic China. So I was at a hotel last week in San Diego, and I didn't see any of this advancedness or futuristic stuff. This wasn't the video I was trying to show you guys.
But this isn't any different than staying at the Hilton in San Francisco.
Is it?
Unless you
Is
want
it?
to, I don't know
Yeah.
about delivering towels by the robots, but I mean, you can go to the
Yeah,
Hilton and never
so
check in.
So this wasn't the video I wanted to show you. The actual video that I saw was, yes, there's robot servants or whatever that comes to your door. But what I saw was a digital check-in. Once you get to your hotel, it was facial recognition to open your door, but also a digital key card.
Right.
Once you go in, it's pretty automated on the inside to like, I guess, voice recognition and stuff. Moving over, besides the servant, the robotic servants, you go over to a gym. They have like a digital gym where you can play games in like a simulated room. So there was a lot more to be shown about that Alibaba hotel, but that video did not do justice. But that's just something to kind of be aware of. Like, how does it work? I mean, because they adopt the mobile phones a lot better in China. So that's why I would argue that the infrastructure is a lot higher. Anyways, let's maybe a few more minutes and we'll get to it.
It just says something up on the right. It says the cannabis booms losers. It would be interesting because I think there's a lot of hype. There's a lot of hype in that, and I think some are real good and some are going to bomb.
Now we could look at a proxy ETF to serve as a proxy. I think it's MW or MJ. So this is a ETF that tracks the marijuana market. So let's see what it looks like from a monthly perspective. So A lot of chop, a lot of volatility. Let's zoom in a little bit more. December, I would expect it to go down because we had a lot of volatility. For the most part, yeah. I mean, it's okay. It's kind of going sideways. I know, recently it was Tilray, which had an amazing run from let's see, from a few dollars or something.
Bitcoin and marijuana.
Yeah. From $30 all the way up to $280 with a market cap of 7.5 billion, right? So
Bitcoin chart. It's like a Bitcoin.
Right.
yeah, it does look like a Bitcoin chart. I actually don't. It looks like a penny stock, right? But it's not a penny stock. This is a serious company, especially if it's operating at that level. But sales are only 20 million.
Can I ask a quick question?
Yeah.
Typical this kind of chart, who actually buys in with so much volume? Is it institution or retail?
Yeah. So typically when I see high volume buying like this, it's most of the time probably dumb money. Dumb money, retail money that is further boosted by the institutional money. So everyone's playing at this point, right?
So who get out first? Usually institution or who they pay?
Usually institutions get out first, right? And some more sophisticated institutions get in first.
But for them, it's also a speculation too, right? I mean,
Yeah,
maybe
it's
a spec profile. They put on.
Here, I'll tell you the average Joe, right? Let's say now a bigger bubble than this is Bitcoin, right? Bitcoin had a global recognition presence. It went from less than $1 all the way to 20,000 a unit. I'm actually quite bullish on Bitcoin. Now you might be wondering why, right? It has to do with global macro. I don't believe in the monetary infrastructure or architecture that we have today. It's slowly decaying with every interest rate lower in interest rate. That's another story. But looking at the chart, analyzing the price chart of Bitcoin, let's take a look at it.
One thing they're addressing too is the speed of each transaction. Right now, it takes about 10 minutes.
Yeah.
All the behind the scenes stuff, which is terrible.
And the cost too.
The reason why I'm bullish on it is more from there's many themes about it that you could play, right? One theme is the sovereign, right? Sovereign instability, global macro risk, devalue the dollar. The other one is a technological theme where it's this is a lot easier to transfer money, right? We talked about how, if you go through the airport today with $10,000 in cash, they'll ask you why, is this registered, whatever, right? But with Bitcoin, you could walk through with a phone and have 10 million in that phone. So that is more from a money laundering perspective. But I'm talking about that. That's a huge economic. Look at it from a technology. Yeah, look at it from a technology perspective, right? And now I'm thinking about the units. Now let's look at it from an economic supply and demand theme or perspective. There's only 21 million units, right? And if we keep devaluing the dollar like we do, well, this thing is just going to keep going up. So that's kind of how I view it, right?
Well, one way to look at it, marijuana is a product. So if you were to go back in 1910 and invest in the Ford Motor Company because you think cars are going to become popular, you would have done well because cars are now part of society. If you think marijuana is going to gain in acceptance in the next 30 years, so that's going to keep going up. I mean, if revenues drives earnings and earnings drives stock, if you think that marijuana is going to gain in overall popularity in society, then that's a good one to invest in overall. Bitcoin, for example, is losing its societal impact. People were looking at it because it's kind of a funny thing. It's this flaky currency. But you don't see, Target having a register saying pay for your stuff at Bitcoin.
We don't see that here, but we see that in China.
Well, but overall, it's kind of lost that adoption overall being part of society. It's sort of a funny thing. Whereas the marijuana, though, more and more people are viewing it, as, well, maybe it'll become part of a societal norm that people buy it regularly. And if that does, then all the marijuana stocks will continue to grow.
So how many themes did we talk about already? We talked about the technology theme, we talked about the global macro theme, the monetary architecture theme, the supply, demand, economics of the Bitcoin theme. One more theme is the demographics theme, right?
Absolutely.
What upside do millennials have today
Right.
in terms of asset prices? Can they buy real estate at all-time high prices? Can they buy stocks at all-time high prices? But yet they're so digitally native to something like this, which they really know. So I'm looking at it from many themes that I just discussed in like less than 5 minutes. I don't know if you guys got it all, but Yeah, I think the millennials are buying this up, and this is a huge wealth building opportunity. I know it sounds extremely speculative. Again, this is all for educational purposes, guys. I don't recommend trades. I do hold some Bitcoin because I feel that this demographics battle is like from a smaller level, a smaller pattern. It's like kids against mom and dad, right? Mom and dad are now on Facebook. Kids go to Instagram. Mom and dad go to Instagram. Kids will go to something else. Right? If you kind of just extrapolate, go to a bigger level, then at a global scale, now this is another theme, I guess, that qualifies as a theme. Let's think about countries. There's only 21 million units in the world, and we're just talking about USA. But China, Japan, Korea, all of Asia, and Europe, they all know about this. Can you trust that when central banks around the world start devaluing the currency by printing more, can you trust any one of them not to buy this? I can't. I mean, it's a classic oligopoly, monopoly, or economic term, meaning we can only have an oligopoly if we all in this room agree not to buy the stock. But can we really trust anyone else? That's why I'm saying the scarcity, the economic theme of it, the scarcity of Bitcoin, just 21 million units in a very unstable global macro sovereign instability world, it just kind of makes sense.
See, I would argue if you did 1,000-for-1 split on this, and Bitcoin became $3.41, and people went to McDonald's and bought a lunch for 2 Bitcoins, and it starts to become a norm.
I don't think it'll become a transaction like that. I think it's going to be a store of value. It's going to be a digital gold where sovereign players are like, they're putting money out of control.
Interesting.
We don't like this anymore. So I see a lot of institutions eyeing this, right? Tim Draper, the VC, he's here in Silicon Valley. He's extremely bullish on this. Just because he inherited, I wouldn't say he inherited, he won a bid and got a lot of units, right? So to me, I'm watching this. I'm watching this at the 3,000. I know it could go down further, but all the themes, we described like 6 potential themes from like a global perspective. There's huge reasons, especially millennials who have no upside right now.
Right.
I think, let me give you a feedback on Bitcoin. So basically, I think what you're saying is that having the idea of decentralized, store of value.
So I want to add real quick, just to answer this question. So it's not going to be used as everyday transaction. What's going to happen is it's going to be a proxy of value, and then it's going to be tied to something else.
So you're sort of saying it's like digital gold.
We don't trade physical gold.
Right, you don't take a gold bar to a
we'll trade
either.
the shares.
Right.
That's how it's going to be. But this is going to be that proxy to hold the value. And I see it because, look, things evolve, right? The physical currency evolved to credit cards and mobile payments. If it's mobile payments now, it's just a logical next step, right? And when I look at a lot of corporations today, and they're using very outdated systems, it's like, man, you're missing out on margin, bro.
Interesting.
Yeah. Sorry, JC, but he had a comment.
Just getting back to Bitcoin. So basically, what I'm thinking, the idea of having decentralized store of value or money exchange is a good idea. I just don't think this is the right
vehicle.
Yes, to do it because it just has too many negative things to it. Like the 21 million. Remember, I explained to you a long time ago where it's really not 21 million because they keep forking it out.
Yeah.
And they get Bitcoin Cash, that's another 10 million. Then they fork out to something else, Bitcoin Gold, another 10 million.
Yeah.
So it's really not a 21 like they promised.
Yeah, it's
way
less.
more than that.
It's less. I'm looking at XRP because I'll buy any digital currency that has fixed supply. I'm not gonna buy Ethereum. I didn't know Ethereum was inflated like 2-4% every year. I don't want that one. I want the one that's fixed, right? So we're just buying this because it's at a global scale, and we have a higher infrastructure today. Well, we're just talking about China, how they're so adopted of that mobile technology. Well, shoot, we're kind of getting there. How many iPhones did Apple push out into the world, right? On top of that, Samsung phones too. So if everyone has a phone today, they say that there's more people with phones than a bank account in this world. So if there's more people with a phone, and a bank account is very essential, people with Africa, they're eventually going to adopt some form of a bank account, which would be probably digital currencies. Wow. So I see a huge inflection point, a huge investment thesis for this, and there are some big-time money managers who are like backing this as well, right? We're seeing Pantera Capital here in Silicon Valley dumping hundreds of millions into the infrastructure, right? They're selling the picks and axes right now.
There's a huge area, not just the retail end of blockchain and Bitcoin, But on real estate transactions, it's almost impossible to scam things because everything's, you know,
Yeah.
you can't change it.
Yeah,
And so, but the other thing is, it can be, like, it'll get rid of title companies.
yeah,
It'll make the transactions instantaneous.
yeah.
It changes a whole bunch of stuff in areas you don't really think of
Yeah.
at first glance.
So that excitement is there, right? Like, oh my God, it's going to change the world. But as an investor, and from myself too, learning from my failures, yeah, you could get excited about the opportunity, but the timing is always critical.
Right.
It's not right now.
But doesn't that graph sort of tell you that the digital currency phenomenon
Yeah.
has
Yeah.
come and gone,
Let-
and it's
let-
on
let's-
its way out?
Let's explain the psychology. Let's explain the psychology of the graph, right? From here to here would be early adopters, speculative ventures, let's say venture adopters, not venture capitalists.
Right.
Even
Right.
2017 is close to 2000. Still, I would put it more like half of 2016.
Yeah. So let's say phase 1's right here, phase 2's right here, right? I'm going to erase this line right here, right? So this is the early adopters, like the people who want to, transaction on the dark web, the drugs and stuff like that, right? And then once it passed $100, it moved on to phase 2, because it's like, maybe it works. Who knows, right?
Right.
And then over here, which is very recent, is mass awareness from around the world, right? People around the world was like, they totally price this in at this point right here to say, hey, this is going to be the next big thing, and everyone's just pricing in right now. When that value wasn't there yet, right? And what happened was, well, if something goes up in a very short period of time, what do traders do? They take their gains. So that's what happened, at least in my eyes,
Is
right?
that what happened? People
Meanwhile,
just cashed out?
yeah, I think people just cashed out. Meanwhile, in the background, the infrastructure is slowly developing higher. I would argue that the infrastructure is like a little bit higher today. And when that infrastructure, this red line is my infrastructure line, right? When the price crosses back over the infrastructure line, or I'm sorry, when the price crosses below the infrastructure line, that's when you see something that's undervalued. So I don't know exactly if we cross below the infrastructure line, but I could tell you this: there's hundreds of millions of dollars being deployed into it every day by people like Andreessen Horowitz, right? The guys who invested in Facebook, right? Or Pantera Capital, who got allocated billions of dollars to deploy money into this space. So that infrastructure is going to be built out every day. There are die-hard Bitcoin fans who are going to make this happen. It's just the world priced it in a little too early in this segment right here. And that's what happens. That's just bubbles right there, right? So right now, predicting the real estate market is extremely tough, especially with the central banks manipulating it. Not the real estate markets, but just the broader markets in general. But yeah, that's the explanation. So after it goes up very parabolic, people are like, all right, after some point the trend has changed right here, right? And they're like, okay, time to take gains, and it just kind of roller coaster down, right? But if you go back and revisit the investment themes that we talked about, six, seven of them, from demographics, global macro, monetary infrastructure, architecture, whatever, to technology theme, economic efficiency theme, supply and demand theme, the investment thesis makes sense, right? But we'll see how it plays out. This might not be the one, but I think it's original, or some people call it OG or whatever. I think there's potential upside. Now that's my opinion, and investment theses are, the purpose of having them is to debate upon them, right? So, if you guys have any debate, feel free. But
Well, my crystal ball says that will hit zero.
XRP.
No, really, I think all of them. I think all of them are bad investments, and that they will all approach zero in the next 5 years.
So that statement is the same as saying Andreessen Horowitz $100 million bet is going to be a losing
Absolutely,
bet. Yeah,
absolutely.
So that's kind of like the reality of it. That's the nature of the game. There's always going to be bulls and bears. But I'm more of on the technological frontier side. I look at things where things are going from that angle. So, yeah, that's my take on it.
The graph looks pretty nasty, though. I mean, just look at that last 6 months.
It looks nasty. It's filled with emotions.
Yeah.
Right? And emotions don't build can I really say that? Rome isn't built in one day.
Yeah.
right? Technological greatness isn't built in one
Well,
day.
that thing was just totally hyped.
It was hyped. It was hyped,
too
right?
hyped.
So that's why as investors, when you play a stock, you need to know when it's hyped. And when it's hyped, you gotta take your gains. If you when you hear your I don't know, your grandma talking about Bitcoin, that's when you know it's hype. Okay,
Right,
people who
right.
okay, when you hear me talk about it, like all the time, I mean I'm a regular. You can't use me as a proxy. You need to use someone like, you know, like your nephew. When you hear your nephew talking about investment, like, oh, like, I don't know, okay, your nephew's 18-year-old, he or she's talking about marijuana stocks. It might be kind of hype, man.
Well, you can think of like the dot-com boom, right, of 2000?
Yeah.
Everything got way too hyped and it got inflated and then it went down, but then it wasn't gonna go away.
Yeah, it's not gonna go
I mean,
away.
it was
So-
only a matter of years before it came back up.
It's just like a correction, because
Yeah.
you look at the up move, that's unrealistic. You had to have it corrected. And you look at the chart right now, where we are right now, it's still holding higher than where it started.
Yeah,
So
that's-
that's why they're holding that price. They want to hold that price.
Yeah.
Well, so you can look at it in the dot-com boom, the whole crazy, right? Webvan was a company that we all know that went sky high, right? And then folded. But they had the right idea. I mean, just think how many other Webvans there are now shipping you a box of food to your house, or there's 50 of them.
That's true.
So they really cracked the code in terms of the concept, delivering food. Like they were just 10 years ahead of their time, right? But they went to the ground. They went nowhere.
So you
But
just have to find the right.
Yeah, it's like, yeah.
but you know what I mean, though. But they had the right business model.
Yeah.
Just were losing money like
Super
crazy,
early
and,
adopter.
and now you got 20 more people, and probably another 20 to come.
Same thing with Palm, right? Palm was the same thing. It was the first
Right.
kind of smartphone. But
And then also to add to the same concept you just made, if you had a company like Facebook, I'm sure before that there were a whole bunch of companies that went under that had a right idea of getting socially out there.
Right.
And you can name probably 4 or 5, you know, that they had that went bankrupt.
MySpace.
MySpace, all of those, right?
Right.
So this is, I think, is MySpace Bitcoin, but somebody's gonna come to replace Bitcoin with the same idea that's gonna make it like a Facebook and it's gonna take off. So that's my take on that.
The next thing to pay attention here is when the big frontier technology players start deploying capital to blockchain. So when I say that, I'm talking about Oracle, SAP, Microsoft, Salesforce, whatever. When those big multi-billion-dollar cloud operations, when you start seeing them deploying money there, that's when you kind of know.
Yeah, but you just have to make sure you understand the difference between blockchain and
Yeah,
Bitcoin, right?
yeah,
Because blockchain's the fundamental technology
Yeah,
that Oracle
yeah.
can use.
Right,
That has
right.
nothing to do with Bitcoin, right?
Right,
It's
right.
more like saying
Bitcoin's more of a collector's item.
Block was like,
Bitcoin is like a car
Yeah.
using gasoline,
Yeah.
Block
whereas
was the freeway.
But
That's right.
we're in an economic situation. If you analyze the economic situation, is do you trust someone in Africa or Europe or Middle East not to buy Bitcoin, not to drive up prices? That's what we're dealing with right now, right? It's not just USA focus.
right.
This thing is global, and that's where it's not like, you know, the tulip bubble. I think that was very in a certain proximity. This
Right.
is a global proximity, and you know, if it sells the hearts of like the other people across the world, it doesn't have to sell USA. If it sells China, you know, sovereigns don't like it. I'll tell you that. Sovereigns do not like this at all.
But you-
That's a major bearish reason about
But the
Bitcoin.
United States
honest.
the US leads the way.
That's true.
If US leads the way, so if they were to say Bitcoin's illegal now, the world's not gonna take over.
Yeah.
You know,
Yeah.
the US is gonna lead.
Yeah. Well, anyways, that's enough on the cryptocurrency talk. That's not the topic of discussion today. Maybe next time you guys want. But real quick, I wanted to answer Bob's question. How has gold, or at least the gold miner stocks that we've been looking at, been performing? For the most part, I took gains on KL. I messaged it in the group chat this week.
Wow.
It's a little too parabolic. I took positions somewhere around here in November. Oh,
Cool.
actually,
That's great.
I had some over here. So this to me, I'll take it. I'm looking at a retracement back to like 28 to maybe consider repositioning it. But they have a world-class mine or gold ore mine body, whatever you call it. That's why this stock is so parabolic, right? Look at this. So this is a performer, though I think it's time to harvest some gains. KGC was one that is invested by, what's his name? The quantitative hedge fund manager. Let's look him up real quick. So we can look at his portfolio. I'm trying to remember his name. Why did I forget his name? Okay, let's do this. Easy way. Just pull up the stock, and see if the investor is let's see, ownership right here. Oh, Guru Trades. So right here, Jim Simmons. This is one of his largest positions. Okay, he has about 50 million shares, and from a hedge fund perspective, let me ask you guys this: what do you guys think is the average? Let's say the upper end average of a hedge fund position size.
What does that mean?
Let's say George Soros, Jim Rogers, not Warren Buffett. He plays a lot bigger. Let's just a bunch of money managers. What do you think is like a big size for them? How many shares?
$20 million, I don't know about shares.
I think, yeah.
I'm talking about shares.
Shouldn't we not say shares, but maybe say percentage of the portfolio? Because it could be a billion shares at $1, it could be, 10 shares at 100,000.
Yeah, I mean, we could say that.
Because that would be more accurate.
I look at it from a trader's perspective. Okay, well, anyways, I'll tell you this. What I noticed is that most of the money managers, they're playing around 10 to 50 million shares. Right? Versus me, I'm playing like thousands shares. A couple thousand shares.
It's dollars that matter. Shares don't matter, right?
From a trader perspective, shares matters.
Why?
Shares move slow, that's why, it's the flow.
The volume of
Because
it. Oh,
like
I
look,
see.
like you could deploy, let's say, 5 billion to Microsoft, and that'll turn out to be, let's say, I'm going to put a random number, let's say 1 million shares.
Okay,
But every dollar goes up, it's going up and down 1 million.
I see.
But they're deploying 55 million to the gold miner, so every dollar goes up, he's making 50 million. So at all times when you're looking at a money manager, you want to know, okay, is this a position that he's just parking a lot of value, right? The value position, or is this a position where he's really betting big,
Yeah.
and that's typically share size.
But I think the percentage of their holdings is more important, because, if you have a 1% of your holdings, it happens to be 1 million shares of $1 stock, and you have a 10% percentage of an Apple, of course the 10% is more important, and 1% maybe just a, lottery ticket for them. So I think the percentage of their
Yeah.
is
Yeah.
more important than how many shares,
Yeah.
because the shares are just depending on the dollar price.
Yeah, so I'm not able to pull up his portfolio. I guess the servers are down, right, from Guru Focus. It's funny, I should ask for like an extra month or something. Just kidding. But this gentleman has about 50 million shares. Anyways, let's go back to it. Let's see the portfolio. So,
Ray Dalio added to it too.
say again?
Ray Dalio.
Yeah. Ray Dalio, these top line hedge fund money managers are starting to bet on gold. They see the reason for it, and gold's price action is screaming for higher prices to come. Except this one, I feel like it's a little bit overextended. I'll take my gains, let it retrace, and just be disciplined to get back in. So that's KL. We looked at KGC already, but this is what the charts look like. This guy, I was looking at his 55 million shares down over here. So if he's 240, 340, so he's up 50 million. That's insane, right?
Huge percentage.
Yeah. Percentage run-wise, yes. That's KGC. GG was the favorite one that we talked about earlier. This one performed, right? So that was one of my big bets, but
But that's a spectacular bet. I mean, if you make 15% return in a month,
Yeah.
you're beating every single mutual fund in the world. I
Well,
mean, if you keep doing that every month, right?
yeah, you
you're
just
doing,
keep compounding, right?
Well, no, but you're doing spectacular. I
Yeah.
mean, that's just
Yeah.
remarkable gains.
So
The
that's
question is how you can guarantee or repeat that investment every month.
Yeah, and some,
by training, practice, and just being disciplined to be here every Sunday.
Still, you should feel
Right?
good about it.
I mean, sometimes I know some faces aren't in here, right? But you guys probably know I'm here every Sunday.
I think it's really difficult to distinguish your luck and your intelligence for investment. So sometimes just get lucky, sometimes.
Yeah.
Yeah.
So here's another one. AEM. We've been watching this one, and clear support right here, right? So nice move right here, guys, from 39 to 43.
Spectacular.
Yeah, spectacular move on that one. Agnico Ego, is that what it's called? Yep, Agnico Ego. Interesting name. AGI. This one is below book value, guys. It's 0.65. I like it. I've been looking at this at, man, I don't remember when I took position. I honestly think I took position over here, right? And I was going to add more if it dipped lower, but it climbed back up. So not too bad. I'm still holding these. These are shares. For AGI, I'm playing shares because they don't really have attractive option contracts that I want to be in. For gold, this one was previously Barrick, or it's Barrick now. They bought the company called, with the ticker gold. I forgot the name of the company. But a lot of consolidation happening in the gold mining space. So-
What a ticker.
What was the ticker?
What a ticker.
Yeah, I know, it's very marketable, that's the word for it.
Right.
PVG, here's another one, right? This one I'm not looking at too closely.
What's your view on that one? The last one you just pulled up.
PVG,
Well, that's a nice looking curve.
let's look at the bigger picture.
Looks like
It's not bad, I think
it's
it probably found a short-term bottom at $6. This one's okay.
Doesn't look as volatile as the other one.
Yeah. And then last one's NG, right? And then I'll show you the silver position. So nice double bottom right here, or multiple bottom, at least according to the algo on FinViz. And then the other position I have in silver. So silver I bought right here, I told you guys, right? I'll never time the bottom, but when I see a reversion like this with some decent volume, I'm just gonna get in. So now I'm in the money in my position. Question is, how am I gonna size up even more on this one?
One good thing about gold and silver, that both ETF GLD and SLD have extremely low pricing options. So you can get like a 6-month option, a 1-year option down the road, it's still cheap.
Yeah.
Both of them.
For my particular exposure,
GLD and SLD.
so that's the gold commodity exposure. I'm trying to get gold miner
I know,
exposure,
I'm just
so
saying.
that's like more leverage. So
Right.
if you want a proxy for that, GDX and GDJ, right?
GDX and the miners.
GDX is the majors, I guess, the major gold miners. GDXJ is the gold miners junior, right? I wouldn't play Nugget and Dust though. This one's a ETP. This one will just keep decaying. You gotta know what you're doing on this one. This one is not a true ETF. It's a ETN, exchange traded notes, right? Because it keeps decaying. But anyways, enough on gold. We're 30 minutes or 40 minutes in. Let's begin today's discussion. But you guys have any comments or anything so far? Doing okay? Okay. Well, anyways, today's number 104, guys. We're going to talk about China's internet sovereignty. And the inspiration behind today's discussion was based off of a report that I read, and I could share you guys the report as well. It was released, I don't have the date on this, but I know it was released pretty recently. I think it's 2019. But it's about WeChat, right? Shape of connected China. And why is WeChat so important? Well, I think this is an extremely bullish investment thesis for the security. It is an emerging market play, right? And we're going to take a look about, before we get started in that, we're going to do a quick market update on the indices, and then a very quick update, or not quick, talk about what happened this week with central banks, right? The Fed manipulation to kind of hold markets higher, which is probably what's going to happen at this point. If they didn't do this, I think markets would have continued lower. But now it's like, this is where the difficulty of being a money manager comes in, right? They kind of, screwed the system, and I'll point out where I notice all the spikes and stuff, right? Like S&P 500, this was Wednesday's spike right here, intraday, right? We have the 15-minute, this is a spike. So they're changing the game right now. But let's take a look at it. So is this a risk-on, risk-off environment still? For the most part, stocks versus bonds kind of going over. So it might be a risk-on environment, right? We might get a reversal now. So that 20% dip buy, well, I learned a valuable lesson. Whenever you get a 20% dip, the first one, after a very long run, always buy the 20% dip. Educational purposes only. Okay, that's how I feel now, because that was an amazing run. If you look at S&P 500, it literally hit the 20% line, and so I'll show you guys right here. Oop. Okay, let's zoom in right here. That's 20% right there, guys.
So what you're saying is when you see a 20% reduction,
Yeah.
that's a buying signal overall, right?
Yeah, so
Yeah.
what I noticed from watching the stock market over the past 5 years is that every time it trends for a very long time, I'm going to pull up the more technical charts real quick. Every time a stock trends for a very long time, it pulls back, because information is asymmetric, right? That's the thing I learned about this game. Stocks go up for irrational reasons most of the time. So let's say we're looking at the chart, and this is a multi-year or multi-monthly chart, right? And we get a dip like this. The first dip, a 20% dip, typically reverts. So I'm always looking to really bet hard on that, right?
Yeah.
It's just the hardest to buy when it dips that much.
Let me add to that is, anytime you see that weekly chart, S&P 500 have a waterfall drop,
Yeah.
usually the 50 moving average and the 200 moving average, if you look at the 200 moving average
Yeah.
weekly, that's going to be the spot. It could be 18%, 22%, whatever the percentage is, it's going to be the 200 moving average on the weekly chart. If you put up a weekly, you'll see that 200 is
So, one question.
Yeah.
If anything falls 20%, then
Yes, so for the most part, the reason why we had to pull back, I think October was the start of like the whole aggressive rise in interest rates.
You're talking about indices or you're talking about specific individual stock?
Indices, which ultimately talks about individual stocks as well as 4 to 5 stocks
But then
follow
you
the
have-
index.
You have over a number of companies.
Yeah, yeah. So the trick to be, you know, a strong investor, in my opinion, is to pick the ones that are outperforming the indices, or that you know that you have a hunch, a strong investment thesis that's going to outperform that. So stocks like Twilio and MongoDB, those are kind of like the multi-bagger plays that I've
That's
seen.
so right. I mean, if you buy stocks that have been hit 20% down, even though they're fundamentally strong, and they, like you were saying, you know, the whole wave takes down everything.
Yeah.
If you pick stocks that are just strong, making tons of money and growing, and they've been hit by the wave of being pulled down 20%, over the long run, they'll rebound and you'll be further ahead than the overall average. Absolutely right.
Well,
Yeah.
not necessary.
Yeah.
Well, no certainty,
Yeah.
but
The
just
probability-
generally speaking.
The probability is always like that.
It's like getting a 20% sale on a fundamentally strong company that you believe, and no one knows the future, is going to get stronger.
Well, how you define fundamentally strong?
Well, who knows? Tesla could go bankrupt, right? Or they could become the next General Motors. Who knows, right? I mean, they said that they almost went bankrupt a month ago, and they still owe $1 billion, and they still keep talking about maybe, you know, who knows? You know, who knows?
Last week they said they made profit, right?
Right. Hard to know.
Yeah, so this rally is starting to get to overbought levels, right? And if anything, I think there will be a second retest of the 20%. Now, keep in mind what I said earlier. After a long run, the first 20% is a buy the F dip, they would call it. The second 20%, I don't know about that one. That's a different one. Right, yeah. First 20%.
When you drop 20%, we're just feel fear.
Yeah, exactly,
We are
exactly.
Afraid to buy the dip.
Yeah.
So, wow, it's going nowhere.
Yeah. Now, the logic behind that. Now, this is probably more of not a firm. This is more of a thesis. My thesis behind that is the second 20% drop. The first 20% drop will always revert after a long move due to asymmetry of information. Not everyone in this room, in this world, who are playing this game, have perfect information, right? I might have a little bit more of a fuzzy crystal ball because I'm always looking. But even then, there's always going to be people who are like, oh, it's 20% off. But they don't track like what central banks are doing. So they will always buy that 20%. So now I have to readjust my thinking, my investment thesis or logic that after every first dip after a long run, you have to buy that 20% dip. It's what I want to engrave into my head moving forward. So I might not have picked this one, but you know, we'll see how it
When you
goes.
say long one, how many years you talking about?
Yeah, so I want,
Like minimum like
yeah.
2-3 years.
yeah, so I wanted to pull up a more technical chart real quick. So let's look at S&P 500, right? So this is what I learned. So that's the 20% dip right here, as you can see. I'll zoom in a little bit closer. See that?
The last 20%.
So what I have on right now is the weekly chart. This is a bigger picture view. Let's do daily, since that's typically where I'm at. So I say after, you know, let's say after like a multi-year, more than 2 years, 1 to 2 years of like just uptrend, then we get a 20% dip. That dip will always get bought because of asymmetry of information, I feel. Now this is just me coming up with my own thesis from watching the markets every day.
We're all learning. Nothing guaranteed.
Yeah, it's not guaranteed, but I think it's a highly probable trade.
Yeah.
That one in highly probable and profitable trade. Right? So, but I think things are getting a little overbought now. We're revisiting some major resistance that's coming. So, as a pilot of the financial markets, if I were to advise, or not advise, but educationally recommend or advise, I think we're going to see some headwind at the 200 MA, 100 MA, and this major trend line that's identified. So let's look at that trend line.
Okay, I just put one chart up on S&P.
Yeah.
Online.
What are we looking at here?
So basically.
So you got the 4-year weekly,
I
so
also did
weekly
the
charts?
Chart, right? So basically on the weekly chart, you see how the red line is the 200 MA on the
Yeah.
weekly?
Yeah.
Look at the red circle that I had on 2016
Yeah.
February. We hit the 200 MA on the red line, you can see way before.
Yeah.
And we bounced off of there, which is really good. And what happens is that blue line, which is the 50 MA,
Yeah.
if we get through it and get counted above it, we're gonna go to new highs, right?
Yeah.
And then you see we did the same thing just recently at 2346.
Yeah.
So now what's gonna happen, I think, we're gonna hit the blue line and double and test again the red line.
Yeah.
Right, so we're gonna hit
I-
2730, go to 2336
So I-
again, unless we break higher above it and stay above it, then we go to new highs.
Yeah.
I don't think it's gonna happen though.
So I'm in agreement with you. What I know is about the industry, the financial or trading industry, is that money managers both look at the daily and the weekly, right? So at this point, I would advise people to recommend, I guess, start looking at the weekly charts as well, right? And start finding like they're both very critical.
So can you repeat what you said?
yeah,
You think
so-
if it's gonna go over the
Yeah,
50?
so basically, I've looked at the markets from 1925 to now, right? So anytime we got the price of the weekly chart going down to the 200 MA, right? We're
Yeah.
gonna bounce off of there, like we always do. And then it's gonna be, the biggest key is gonna be when we get to the 50 MA, which is the blue line. If we go over it and the candlesticks stay above it, we're gonna go to new highs.
Okay.
And on the bear market, if we hit it and start crashing lower, we're gonna retest.
Retest down, you mean?
Retest the red line again. And if
Oh.
we break the red line, we're gonna go another 30% lower.
Wow.
So we're at a key moment right here with the blue line.
Yeah,
which we're gonna see how it develops, but I'm just telling you that if we hit it and start heading low, we're
So-
gonna retest.
So this blue line is the same thing that I'm seeing with the 200-day moving average, right? On the daily level, because when you flip charts in terms of time frame, they'll change. Anyways,
Wow.
I see only about weekly, right? And I can show you the 1929 chart,
Well-
87, 73, all of those, and it's the same thing over and over.
we're gonna get to the next part here because
Yeah.
I got quite a bit. So what I'm seeing, guys, is major objective downtrend line. The 100 MA and 200 MA are gonna act as resistance moving forward. So real quick, daily chart, 200 MA, 100 MA right here. So we're right there. So I'm expecting some resistance in the coming trading days, right? Another way to look at SPY besides the moving average is the trend line. So I put two SPYs right here. So this is the 100 MA test and close to the 200 MA test. Looking at SPY, major trend line right here, right? I don't normally play trend lines, but when it's something as objective as this that a computer could detect, I'm gonna put some value onto it, right? And it's not just SPY, it's also Dow Jones. So that's something just to kind of anticipate in the coming trading days if you're actively trading, but nothing much there. We won't go too deep into indices today because today's gonna be more about digital China or internet sovereignty. Super interesting stuff. Fed, so another thing that happened this week, I think it was super duper important because all asset classes kind of started rallying. And I think we might even pick up on the real estate market after the news. But basically what happened in a nutshell is that they expressed a lot of dovishness, right? Meaning that they were so confident about tightening the financial system or economic system that it impacted the world, right? We saw Nikkei, we saw Europe, or we saw Japan, we saw Europe, just around the world pull back pretty hard, right? And bond markets were reacting to higher rates by going down. And then gold kind of just bottoming and going up. So for the most part, that was the day that manipulation occurred, or at least they firmly stated that. We could look at the statement. Let's go down. And before we look at the results of what happened around like currencies, emerging markets, developed markets, and stuff like that, let's look at a statement. In light of dovish behavior, in light of global economic and financial developments and muted inflation pressures, the committee will be patient as it determines what future adjustments to the target range may be appropriate. So they're not going to tighten anymore, right? And how much did they really tighten? I showed you guys the chart earlier. This is how much they tightened. Let me make this a little bit bigger so you guys can see. So they didn't tighten too much, right? This was the major issue right here. If for those of you who don't know, what are we looking at? This is the net balance sheet of the central bank. Meaning, whenever they buy assets, this net goes up, right? So if you look at 2008, what happened? We had a recession. They had to buy assets. They had to buy bonds like crazy, right? They bought bonds so interest rates would go down, right? So they bought so much to stimulate the economy for the past however many years, right? To a point where just recently, where I drew that blue line right here, where they realized they need to reduce. If they don't reduce, they're further damaging the monetary architecture, right? And that's why our credit rating went down across the world, right? I forgot, was it Moody's or whoever, lower our USA bond ratings? So that's significant. And if this keeps happening, if they don't lower this, the double whammy here, or the double-edged sword, is if they lower it, we all get hurt. Asset prices won't inflate. So if you own prices, like real estate in the past 5 years, they inflated a lot. I could have sworn in Property Radar, when I'm looking at some of the people's net worth or their real estate net equity, It's like, dude, you bought it in like 2013, and 5 years later, it went up like almost $1 million, right? So 2013, I said 2013, right? Right here. That's 2013. And they bought assets, and then I'm looking at 2018 now, and this person's up like 700,000. You know, if you're a trader,
How many trade you need to make to make that 700 from the 700?
700,000?
Yeah.
I mean, they just bought a home in
Yeah,
2015.
That's why.
2013.
Yeah, he's saying, imagine how many trades would have to make.
Yeah.
to make
if you
that.
trade
Exactly.
on-
Exactly. So real estate prices are inflated. That's something to be aware of. That's why it's very lucrative for the real estate agent.
China's even more crazy.
China's even more crazy because yes, they locked up their economy and started printing a lot of money. But for the most part, that's what it looks like. And so this reduction right here caused a lot of volatility in 2018. So we'll have to see what happens moving forward in 2019. But we'll continue to monitor their balance sheet or the wording around central banks. That's the most important thing right now. If you're in college and you're in a finance class, man, those professors, like, you know, I have professors who are PhD in finance and stuff, but like, I'll be honest, man, they didn't know much about like the central bank, like everyday news, I feel. So I would joke and say it's a financial history. Not trying to insult anyone, but I know a lot more now than I did in college, and that's what I noticed. And again, you know, there's this other thing about adults paying for college tuition, right? Tuition goes with inflation. So if central banks pump money and cause the tuition price to go up, you're paying more. But if you're paying more for the education, does the quality of the professor's teaching go up? Right?
Hopefully, yeah.
Right? Yeah. And so consumers, because I always bag on consumers, but because they're not at the frontier of their thinking, well, you know, as parents, I think people are overpaying for lagged education right now. And that's why we're seeing the VC ecosystem funding, you know, up-to-date education at a lower price. It's beating the higher priced, lower education. The economics is there for that. So that's why it's like, oh man, like if I was a VC, I'd be dumping some money there too, right? I don't want to be a business owner. I want to be an investor. But I'm not a VC. Maybe one of these days. Anyways, so what happened as a result of that comment on Wednesday, right? So if you guys don't believe that comment's real, here's the actual press release. You guys can go to FOMC, whatever, and look up the most recent press release. The highlighted says, in light of global economic and financial developments and muted inflation pressures, the committee will be patient as it determines what future adjustments to the target range for a federal funds rate may be appropriate to support these outcomes. So they revealed their hands. As a poker player, they just revealed their hands to us. What did they say? They just said to us that the equity markets are very important.
That's kind of the opposite of what they said in December when they were hawkish.
Yeah. Yeah,
Well, that's
I mean,
exactly
December before, yeah.
That's
Yeah,
exactly
yeah,
right. It's a way of basically saying we screwed up in December. Donald Trump was right that we never should have raised it in the first place.
Yeah.
So we're putting our cards back and saying we're lowering it, and the market
Yeah.
goes crazy.
So now when people are asking Kay, like, can you tell me, like, are we at the top of the business cycle here? Is the recession coming? Well, there's manipulation, right? This is where it changes, basically. Like, if they didn't come in with this press release, I would still be bearish. But now it's like, well, now they confirm a low on gold, basically. Right? They're not going to fix it. They're basically making their balance sheet permanent. Meaning, the chart that I showed you right here, it's not going to go down. It's going to be a fixed level of assets. In other case, this is the same thing. Okay, if the central bank's assets are going to be fixed, they're basically saying the government's debt is going to be fixed in, and it's never going to go down. Right, and they could do that because we have the military, and everyone's operating on a dollar platform, right? So it's the same example as I always say, everyone's operating on Amazon, so they got all the powers to hire vendors and stuff. And we're going to look at WeChat today, which is a digital mobile application in China that is the dominant platform of everyday life.
So do you have this going 20, 30 years, this chart?
Oh, going back 20, 30 years? I don't. This is from the Fed, the actual central banks, but that's something we could probably look up another time.
They're in a spot where if they go either way, they're in trouble.
Yes, it's a lose scenario, as money managers call it. So it's a lose scenario for the central banks, but it's a win-win scenario for gold investors. So I think they really announced the bottom of gold. Now, you guys could challenge me on that. I know not everyone's a gold player, but my education has escalated me to a point where I'm a believer of gold now. If not, then it'd be like Bitcoin or something, just because the sovereign global distress, right? So let's take a look at what happened. How did the markets reacted to Wednesday? S&P 500, 15 minutes, Wednesday. Look at this skyrocket right here. And then the days following, at higher prices, right? It's kind of like central banks gave a early earnings forecast.
No, they said risk on.
Yeah, so it's starting to look like a risk on, but be aware that we are kind of overbought as well. And so the people who lost a lot of money, like me, I liquidated my 401k back in like December because I was so scared. Well, they might be hurting to sell, so there's some volatility in the coming days.
There was also a positive jobs report on Friday and more positive earnings from companies on Thursday and Friday too.
Now, if you listen to the earnings calls of the semiconductor space, super fundamentally bearish. Right? But performance-wise, stock performance-wise, bullish. See, markets never make sense. Something to always keep in mind of.
Can I just ask you, do you think companies are intentionally sandbagging their guidance so that they can have remarkable results for October through December, but all just sort of sandbagging, saying we're not sure what our visibility is for January through March, so they tank because of it, even though their fundamentals are strong?
Yeah, so the economic incentives are there, right, for a CEO to say, let's do buybacks.
Right.
My pay increases.
Right.
Right? And we're at record buybacks and all that.
Right.
In terms of like analyzing the corporate, all the corporate. So
it certainly feels like there is no upside to, being truthful in your guidance, right? If you can sandbag a bit, it's always good in your own interest.
Yeah,
Because you can beat estimates. There's no, benefit for guiding high and coming in low.
Yeah, you know what I think the majority of the CEOs, what they're doing is they really don't know what's gonna happen because of the March 1st trade deal. So they kind of not sandbagging and not doing it, kind of just middle of the road, they don't know.
Yeah.
They don't know how the Brexit's gonna end up, they don't know about the March 1st deadline.
Yeah.
So they just don't know, and that's gonna solve everything. So because if they send back 2 months, they're gonna take a big hit on their stock, and they don't want that. And if they become overly, they're gonna get a nice stock in March. So they don't know, because March 1st is gonna be the
What's the March 1st? What is that?
The tariffs go up. The tariffs go up from China.
Oh, I see.
So that is gonna determine everything.
Right.
They're gonna have partial deal, full deal, IP, no IP, all that's gonna be the huge thing.
yeah.
That's interesting.
So markets went parabolic as soon as Feds indicated dovishness and plans to adjust rate hikes, according to financial markets. I put that in red and in bold because they're really trading the markets now. At least it's very clear to me. I don't know if it's clear to you guys. I don't know if I have to make it clear though. But yeah, that's the current situation. Now you look at the dollar. What happened to the dollar? The dollar dipped that day, right? Same thing. 15-minute charts. Dollar dip. Well, we're not pulling dollars out of the system. Then why should dollar value go up? Right? That was the plan. The dollar was rising because we were raising interest rates and pulling money out of the system. Less dollar supply. Simple economics. But now we see the dollar going down, and as a result, on the other side, gold went up. All right. So yeah, it was a nice little mini breakout in gold this week. So not a I had to take some gains on one. As a result, the dollar index tanked on intraday. If Feds aren't removing liquidity, pulling dollars out of the system, then how can supply and demand let the dollar rise? It's basically this right here.
Okay, by the way, that gold call you made was right on, spot on, because you did it early on, before the Fed meeting, and it's gold skyrocketed, so everything. That was a good call, for sure.
Dude, that's the thrill. That's the thrill of the game, man. I don't know, but thanks. It's just keep going. Go to the next trade, I guess. One of these days, I want to do a huge software bet, but which is probably BlackBerry, but not quite there yet. Because
that was not a good call.
I mean, BlackBerry is no longer BlackBerry, right? BlackBerry is a $4 billion company right now, or 4 or 5, and they acquired something for $1 billion called Silence. It's basically a startup now, but it's basically leveraging BlackBerry's install base, customer base, which is government, but now operating as a company called Silence, and that Silence is spelled with a C, Cylance. So now I'm actually betting on a startup that got taken to public markets through a private transaction. Right?
I was totally wrong, by the way. In the last week, I think I said PG&E was a disaster stock, even though they did declare bankruptcy, and they still have more debt than assets, and the stock doubles in the week, right?
Well, it depends, right? It went from $73 to $16. So what are we looking at? What time frame? You know what I mean?
Well,
It was 73, now it's $16.
Still, I mean,
Yeah.
So let's explain the logic. What happened to gold? Well, devaluation of the dollar, so the dollar went down, plus hinting the Fed balance sheet will be permanent equals bullish for gold. That's the mathematical framework I have in my head, right? I try to keep it simple or maybe dumb it down to like an equation, but that's why I think gold has central banks that signal a bottom in gold, and the other thing for gold would be sovereigns around the world are buying gold. Russia and China never before seen gold purchases. So and then we're seeing gold mining industry consolidation. Why are they buying each other? You only buy each other. You only deploy capital when you think it's an investment. So I'm piggybacking off the trade of like sovereigns agree that it's going up. Gold mining industry also agree that it's going up, right? It's a consolidation. What happened to the bond market? Let's zoom in a little bit right here, right? On that Wednesday, that not be, okay, let's look at the bonds right here. Bonds reacted with higher prices. This is the Wednesday right here, right? 30-year went up and then went down over here. 10-year spiked up, 5-year spike up, 2-year spike up. So bonds reacted positively. Can anyone explain the logic on that? Don't mean to quiz you, but it doesn't look like interest rates are going up. If interest rates are going up, bond prices going down. So if bond prices going up, then it looks like interest rates are going to remain sideways or down.
Well, if that would mean that if interest rates are going down, the existing bonds with their higher interest rates are where you want to go, so the existing bonds would go up.
Yeah. Can you imagine, okay, a little digress, can you imagine being in the office of a sovereign fund? Like you're in the sovereign fund of Malaysia, India, China, or Saudi Arabia, and you're managing billions of dollars, right? And you're trying to like capitalize or hedge this trade based off what the U.S. is doing. You're thinking at a global, like you don't at this point, you don't know what law is. You're operating at the highest of levels that. These are economies right here, and your economic impact, how you decide to behave as a money manager, will affect the world. It's insane, but I geek out to that. This little button right here is gonna be a huge economic right? Just something to geek out to about technology. But anyways, that's what happened in the bond market. Let's look at the currency market, right? If the dollar went down, what happens to all the other currency? Euro, Japanese currency. Pound, they all go up. Look at that. So all of them go down, or I'm sorry, USD goes down, dollar goes down, but everything else goes up.
Well, is everything else in terms of dollars?
Exactly.
Oh, so
because you can only be in either one. If you're in dollar, then you're not in euros,
right.
or Japanese yen. But if you're in Japanese yen, you're not in dollar.
So it's a teeter-totter.
Yeah, it's force. It's purely force. And maybe that the currency index didn't make sense to you. We could look at the currency actual pairs, right? So let's go to the hourly and look at the euro dollar. So if the dollar went down, then euro goes up, and it went up right here, right? And then this one goes up because the pound went up against the dollar. And then this one went up. Wait, no, I'm sorry, dollar went down, right? Because JPY went up. I like to look at it from an index, a currency index perspective, just because it's easier.
Right.
When you look at pairs, you gotta be like, okay, this one went up, that one went down. So that's why I like it. The interesting one that I noticed was that Bitcoin, it didn't spike as much. January 30th, this was a spike right here, right? So it tells me that not a lot of institutional players are interested in Bitcoin right now. Where's that spike? Right there. So Fed announcement, high volume spike right here, but not a huge one like something like right here. But there are some players who are behaving to this mechanical, systematic process here. Anyways, what happened to emerging markets? Right, when dollar goes down, the emerging markets go up. So now I'm really eyeing Chinese stocks. Alibaba, Tencent, Baidu. We're going to talk about Tencent today. Tencent is the everyday life of Chinese people in China. So I figure, hey, with emerging markets behaving the way they are right now, let's talk about the next awesome trading opportunity. Educational purposes only. I have to say that because I come from the financial world and they take that stuff pretty seriously. It's ridiculous. Like if you don't do proper disclosures, I don't know.
Sued.
Yeah, and it's just like, how do you talk about this from an educational perspective? So, as always, guys, this is just an educational
Of
investment
course,
club.
absolutely.
Yeah.
Yeah, you're getting a lot of new people too, so it's important.
Yeah, I have to keep
Because
disclosing.
it's not stalking, people
Yeah.
go out and buy it.
Yeah, and it could promote hate too, you know, like I say something and I'm wrong, but this person is very of high emotion, not of like low emotion and high logic. They're high emotion and they're like, dude, you're wrong, and they come in here and you never know what could happen. So again, I have to like disclose every time. I do apologize. Lower dollar means good for emerging markets, meaning it's time to consider emerging markets and Chinese stocks, or at least it looks attractive at this point. So let's skip ahead. So that was the central banks and the result of central bank activity. What do you guys think? Pretty cool? Because that's the first half. We did a quick recap on indices, looked at central banks. Now we're going to move on to the topic of the day. China's internet sovereignty. Any question before we begin the next segment?
What about the oil with that, please? Any
Oh yeah, I didn't even look at oil. Let's look at it real quick. So let's go to futures. I do admit I need to improve my oil game. You know, I read a little bit on the whole Saudi Arabia. Yeah. So let's look at Wednesday. So I would expect the same because oil is a commodity, right? Commodities are fixed. There's a fixed supply in this world. So we're just applying simple mathematics to see what would happen. If anything, I think what the Fed did reinforced the investment thesis for gold and also oil. Because oil is also a commodity like gold. So if you guys are looking at, you know, lucrative looking oil stocks that pay dividends, you're going to have appreciation and dividend payout. So a strong play, in my opinion. Great first half. Looking forward to enter second half. Let's do a quick TA right here because I do see an awesome pattern that maybe some people might not see. But this is clearly a reverse head and shoulders, which is bullish, right? So if we get a pullback on gold, I would consider, right, for maybe some, it's already breaking out right here. So I think, I'm sorry, I said gold, but it's oil. Oil looks good, guys. So you guys could always do analysis on oil stocks. Okay. Anyways, so what's the inspiration behind today's talk? It's basically from this report right here. I think this report was released 2019, or most recently. If you guys want this report, you could Google it, or you could ask me, I could send it to you. But basically, they did a really good job of talking about how infrastructurally the economy of China has changed, right? And we've been talking for some time that they're pretty advanced, it's true. I see it, I hear it from people who go visit China. It's like, you can't get around in China if you don't download WeChat. You know, you ever go downtown and you're like, oh, I can't get around on this Lime scooter unless I download the app. It's kind of like, now it's like you can't really operate in China unless you got the app. Kind of funny. But it goes into extreme detail, maybe not too extreme, but really great detail as to why there's a digital internet firewall, the Great Chinese Firewall, not the Great Chinese Wall, or Great Wall of China, whatever. It's the great, it's the Great Firewall. So before we begin the analysis, right? Let's use a proxy. Let's see what's going on in emerging markets. For the most part, I'm seeing emerging markets are reversing right now with a lower dollar due to the Feds, right? So emerging markets are looking good. As a proxy, EEM we're using, this is what it looks like. It's going above the 200-day moving average.
So lower dollar should mean that,
Higher EEM,
what is EM?
higher emerging markets.
I
Yeah.
understand. But what I'm saying that lower dollar means higher prices in terms of the currency that is being traded on. So WeChat would be, right?
Yeah.
So so that means that market is going to go up.
Yeah.
But if you convert it back to dollars, it's probably the same thing.
So I kind of got lost on the last part. When
So-
you said revert back to the dollar,
Okay.
it becomes the same again.
You have $100.
Yeah.
Suppose it's 7 RMB.
Yeah.
700 RMB.
Yeah.
Because you are buying more, it's going to 9. But when you convert it back to the dollars,
Right. Yep. So that's true. Yes, you're right. And emerging markets, if I recall correctly, they leverage off the dollar, and so they're going to get some tailwind right now. So to me, this is probably that time to start looking at stuff like IQ. Santo, I know you're looking at IQ, right? So I think that there might be a fixed risk reward trade on
Let
those.
me make a comment on emerging markets, So remember what I told you guys, S&P 500 is everything, so whatever S&P does, emerging markets is gonna do. So what I do is if you look at the weekly chart of EEM, which I'm gonna go ahead and put it on the chart right now, I'm gonna just tell you, you saw the S&P went down to the 200 in May, then went back up to the 50, and I think from 50 is gonna crash down and retest. Look at the EEM, to the 200 move from the top, back to the 50, and then whatever the S&P does, this thing is gonna do. So if the S&P goes down from the 50 and May goes lower and retest, so is the EM.
So we're looking at weekly.
Yeah, all weekly, right? So from the top, EM went right to the 200s. You can see it touched it. It went up and touched it again, and now we're going heading back to the 50, just like S&P. So my point, S&P I think is going to break lower from the 50, and so is the EM.
Yeah. So
Unless S&P, of course, goes higher above the 50 and breaks above it for 2-3 weeks and goes to new highs, so is the EM. All I'm saying, EM is going to do whatever the S&P does.
yeah. So this is the same thing as, I mean, looking at the what's this? The 80 MA. You got the
I just
80.
look at the 50. I just put the 80.
Oh, so the 50
is the blue one.
the 50 MA is very similar to the 200 MA on the daily.
Yeah, I don't look at daily too much, but you probably.
But
they're gonna be
it's
close.
it's
Yeah.
very in line with each other.
Right.
Yeah. For the most part, we're kind of just repeating it at a weekly scale,
Yes.
right?
But the weekly, sometimes the 200 will break higher, but not the weekly.
Yeah.
And the weekly to me.
So what I'm looking at now is how will this emerging market behave at the 200-day moving average, right? On a daily chart, it'll act as a proxy to what emerging markets look like. So
One more question.
Yeah.
So emerging market is all in dollars, right? You're not doing any regular, you're not doing foreign currency. It's just, everything is in dollars.
I'm sorry, repeat that.
Emerging market indices that you're showing, they're all denominated in dollars.
I can't
Yes.
speak to that confidently or with confidence.
Probably, because that would explain all the gaps, because their market's open when ours is closed.
Now you could always overlay. I don't want to answer the question because, well, emerging markets, like if you pull one stock out of this, Alibaba is operating on renminbi. Is that what you're asking?
No, no.
This is an ETF anyways for emerging markets.
Yeah, it's supposed to just track all those stocks, right?
But they're tracking based on the regular currency. for
No,
that
no, 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 no.
For that country.
I mean,
We're the
they're,
numbers
they're,
are right.
so this is a proxy or a basket of like stocks like Alibaba, Tencent,
Right.
from the heavyweight to the lower weight.
Mhm.
That's all.
Well,
and
you
how
guys-
they move.
This is dollars. If you bought it, those prices along the right are dollars.
Right, right. Yeah, oh, okay, so that's what you're at? Yeah, you're right, yes, it's dollars, okay. What you could do is add an overlay like this, and you'll see it'll behave completely opposite to, let's see, the dollar. So, add drawing, nope. Studies, add study, compare with, custom, sorry, that's quite a bit of a
That's
process.
kind of awkward.
Wait, what?
I just said that's kind of awkward.
Yeah. Okay. So you see how it's opposite of. So what we have on here is the purple is the dollar, and the chart, the price is emerging markets. They're inversely correlated. So as this goes down, you see how it goes up, right? So now that we know if they're inversely correlated, then if the dollar goes down, emerging markets, according to this chart, will go up. And let's back test it. Let's look at a longer perspective. Let's do monthly, looking back, and how correlated this is. Not too bad. We had a sharp decline here in the dollar. I'm sorry, in emerging markets, and a sharp rise in the dollar, right? Just like what we had recently. Sharp rise right here. You see this right here? The start of the tip for emerging markets, and then the low for the dollar. Right? So what I'm seeing now with the way the central banks are behaving is that they're pushing the dollar down. So if they're pushing the dollar down, I see short-term trading opportunities, even maybe mid-term trading opportunities for emerging markets. So that's why I'm looking at Chinese stocks now. Again, always have a risk-reward a stop. If I'm wrong, if there's more volatility in the markets and the dollar rises because of global fear, people running to the dollar, it causes the dollar to go up, emerging markets will go down.
So in your portfolio, do you segment it by different levels of risk? Like for China, you're not putting
Yeah,
the whole thing
so
in China, but a
yes.
certain
So I
percentage?
have like an options portfolio
Mhm.
and then like a shares portfolio.
But in terms of your total portfolio value,
Dude, I got like,
do you
I think I have like
segment
10 brokerage accounts, man.
it? No, but you'd like
Yeah.
say, well, I'm going to put 10% of my net worth into China and 10% into.
No,
you don't do
I'm
that
not.
kind
I'm not money manager status yet.
of- Interesting.
That's when I'll probably, let's say if I had 100 million, then I have to think like that. But because I don't have 100 million, I just betting like that doesn't do me any good, I feel. I mean, it's nice to be a portfolio manager, trust me, if I raise 100 million, let's say, I would even diversify into physical local businesses and get exposure to robust Silicon Valley consumer retail.
Yeah, but even if you have
Okay.
1 million, I mean, do you say, you know, for Bitcoin, I'm not gonna put a one, if
Oh,
let's say
yeah,
your net
yeah.
worth was $1 million, you're not gonna put
Yeah.
$1 million in Bitcoin.
Yeah,
Do
you're
you
right,
say,
you're right,
well,
yeah.
Bitcoin's kinda neat, so I'm gonna put 5% of my portfolio in that, and 10
Yeah.
in China, and
Yeah.
10 in General Motors, and
Yeah,
10
so
in gold.
for the
and-
most part, yeah, I don't
No?
do that. It's
Okay.
still very messy and
So
discretionary,
you
I'd say.
probably don't do it on paper, but you probably do it on your mind. Like if you're extremely
Yeah.
confident on this, you go higher.
Yeah.
If you go not too confident, you go lower. But it's not an actual.
Yeah, I have concentrated bets, and so when I have concentrated bets, I'll probably do like 25% of like
Interesting.
what I got, you
How
know.
about people in the room? Do you guys consciously do that?
Yes.
Do you consciously split your portfolio to a certain amount into high risk, like Bitcoin's high risk, and these are unknown, who knows, and, you know, betting on Tesla's high risk, but betting on Procter & Gamble's low risk. I mean, do you guys do that?
Yeah.
Yeah.
Bitcoin 1%.
That's the beauty of the game, you know.
Yeah.
It's
Some stuff you just day trade, some stuff you invest.
let me show you.
Size.
Let me share with you this investment club. There's markets, and then there's yourself. I can't predict markets, but I
Right.
can predict myself
Right.
based off my decision. So the way I treat this investment club is I'm here every Sunday very quantitatively. I'm deploying a model. People
Right.
probably don't see it. I'm here 4 days a month, and maybe 5 days if you include the mixer. Four meetings, investment club meetings, and 1 mixer. That is deployed onto a market that I can't predict the other side. But I'm just being very systematic and consistent, and the market will return to me. So in this investment club, when I see people come in, some days it'll be high, some days it'll be low, depending on the markets or depending on the weather.
Yeah.
So today's weather is probably a factor. But that's the same thing that you would apply to trading as well.
Yeah.
Right? If you could just go very systematically. And that's why I see if you look at markets long enough, you evolve into a quantitative trader because you don't really want to.
It's called Kelly's criteria.
Yeah.
Right.
Yeah, so the Kelly criterion is it's sort of like a back test on your personal performance, right?
It's actually how to allocate the portion of your portfolio to particular investment based on the probability.
Yeah. So the issue with many investors that come in here, number one is emotions, right? If you could discipline yourself, just play a model, you remove the emotions, right? I don't know how many people are going to come today, but I'm going to be here and see what the market gives me, right?
Yeah, absolutely.
And I don't know where the stock's going to go, but I'm using a systematic, logic process or mechanical process that's going to tell me where I think the market should go based off this thinking framework, right? So I just keep deploying it over and over, and at this point, if I want to make more money, I need to bet bigger. That's my issue these days.
Yeah.
If you're consistent in your trades, like 60, 70%, all you need to do is just bet bigger and you start making a lot of money. I can see the money rolling in pretty quick. Though I have the fear that, I need a stable income that just comes in. So that's where if I were to raise 100 million, I would diversify in terms of like, okay, we'll go a little bit safe with some commercial real estate, but I'll probably have to go in there and do a value add on commercial real estate. Where I have 100 million, well, I'm going to hire guys who know how to flip real estate, commercial real estate, go in there with hidden cap rates, and then deploy some money there, get that up to like, a certain rate. So now I got a solid 25 or 20% commercial real estate portfolio. Next, I'll deploy some into a business, right, out of the pie. So I'll buy, businesses that I think I could restructure, leverage the network that I build in this meetup. I own about 6 meetups now with 1,800 members, right? So if I buy local businesses, then I could deploy marketing and they'll go to the business, whether it be like Indian food I like Indian food. You guys ever been to Bombay Garden in Fremont? Man, they give like a lot of food for $12. All you can eat for $12. Yeah.
Wow.
So.
If you like Indian food, there's like a street food place on a gas station at near Central and Fair Oaks.
Yeah.
Highly recommended.
Okay.
What's
yeah.
the name?
It's the gas station. It's the Chevron gas station at Central Expressway and Fair Oaks.
For Indian food?
Yeah, they have a truck. They have a food truck.
Oh,
Yeah.
food truck.
Oh, food truck.
Yeah. So I used to. Well, I'm still a big fan of Indian food. I used to cook it too. And if you understand recipes and trading, it's the same thing. It's a model, right? If you just follow a recipe, you're following a model, right? So if you master the recipe, you should be like that 5-star chef or whatever, right? And the discretion, like let's say you got the recipe, the formula, your discretion is in between of like how you manage the heat, how you manage like how much salt you put on or whatever. So yeah, my thinking is very quantitative.
Cool.
I feel. But anyways, little digress. But anyways, that portfolio chunk, right? The other chunk I would do businesses to get some income. I'll probably buy mid-market businesses. Like I'll go look at something robust close to Silicon Valley. Because why? Because Apple's right here, and they pay very well to their workers. And so I know the workers have very strong balance sheets that they will spend locally. So I want that local business exposure in my portfolio. And then from there, I'll have like 20% in like the stock market. And then some bonds and maybe derivatives, like 5-10%. So that's how I would allocate if I was a money manager level, going back to your previous question.
Excellent.
But for now, it's like very messy because I don't have the need to. I'm building up my back end, right? But that's that'd be the dream, man.
So speaking of businesses, have you noticed how every gas station now has a food truck? They're probably getting some commissions off these food trucks.
Always.
Almost every gas station's got a food truck.
Oh, yeah, I saw Steve.
Wait, what do you mean by full truck?
Food parking
Oh,
at gas
food truck.
stations.
Yeah. It's a definitely a complement to the business.
Yeah.
Which is
Right.
what you say.
Yeah, that's a win-win
Central-
for both. That's right. Strong traffic for the gas station.
Central
Yeah.
That's a good
Yeah.
model.
Yeah, so these are robust investment models that, even in a recession, I think I'd be okay because I'm going to allocate the portfolio to local
You
businesses.
have to get pump gas, oh, you hungry,
Yeah.
go to food truck.
Yeah,
Save time, money.
yeah, and
Back at
It's
the
the other
gas
way
station.
around. You like the food, you go to eat food, oh, I have to fill gas anyway.
but most people don't know how to go and ask for that,
Some kind
right?
of more program too, right? You
Can I ask you, is the food truck parked on the street or parked on the
Inside the gas
Inside
station.
the gas
Yeah,
station.
that's the
I
whole-
start seeing that too,
Yeah,
yeah.
that's seen that too, because
See-
I saw before, like, in certain cities have like fireworks being legal. So what happens is during fireworks season, I know the owner of some of the restaurants and stuff, they let them use their parking spot for a firework for a month, they charge like $5,000 just for 1 month. And then that's exactly what the food trucks are doing, they're taking advantage of the free real estate, which is, and they're paying a commission for it.
Well, guys, as much as local small businesses sound very interesting, it's very difficult too, okay? Like, you gotta buy the ones that are automated, it's passive ownership. I'm not trying to buy the ones where I'm actively managing it, because I'm no longer,
Franchise like a model, or you run
it has to be a model that's already running. Something like a Chipotle, right? Chipotle, you go in there,
Absentee.
it's all processed, it's all scoop, roll, repeat.
Being owner
Right?
absentee franchise
So
types.
if you know mathematics, there's models everywhere, and you got to be aware if are they deploying a model on you, right? When you go to like a hotel, that experience you feel, it's a model, baby. But most people don't see it because people come into this world in different walks of life, right? Some people might come in from a more emotional side, and then actually I think everyone comes in emotionally, and then you kind of grow old and become more logical.
Absolutely.
Yeah.
Keep your emotions under control because you're kind of reliable.
Yeah. So after 5 years of training, I think my emotions are pretty okay. I'll admit I had a stage fright scenario like at this investment club. I think it was number 20 something, where I just couldn't talk. I was like, blah, blah, blah. Like I just kind of like lost it. I'm like, oh shoot, I forgot what I was gonna say. But now it's like practice helps with the. Yeah, same thing with the mixers. The first mixer, I didn't know how to prepare for it. I overbought in terms of food and drinks. But now I know exactly how much I need for the rate of people. So sometimes you just have to deploy yourself into a market, right? Get yourself trading, make some trades, and then you start feeling the trade out, and then you adapt to the markets.
Great.
It just takes time. Now, talking about the gas station, how you make $5,000 a month is super interesting and all that. But at the end of the day, the end game is really right here, guys. No, this is where the information is at, right? I don't need to look at SMB because if you're an SME, if you're a small business owner and you start scaling, right? At some point you're like, oh man, I need more money. I need to go public because I have 2,000 locations across the nation. I need to go public. And once you go public, the numbers are given to me. So we're already analyzing the end game right here. This is the end game, right? Remember how I said in private markets, Uber at most will go up to 60 billion? But public markets go up to 1 trillion. This is where the true end game is. This is where if you have massive amount of capital, it's deployed in the public markets. It's not deployed in private markets. Though with the, things getting very tight in recent times where there's not a lot of upside, VCs are starting to deploy a lot of capital into the private space, and we see that. So anyways, moving forward right here, looking at looking at emerging markets, that's what it looks like. 200-day moving average resistance. The other side, looking at Asher. Asher is Shanghai. Another proxy ETF for us to just see what's going on. So they're kind of coming off the bottom as well, above the 100-day moving average. Nothing too interesting. So today's discussion is going to be about WeChat. WeChat. You could actually buy their ADR, American Depository Receipt, right? It was previously down 50%. I don't know if you guys can see that, but if I zoom in right here, it was down 48%. Right? It's bouncing off of 48%. Right? So you're probably wondering, like, okay, cool, down 50%. But we're going to look a little bit deeper into like how economically, I don't know, fierce this company is. So let's look at the report. So at least now you know the stock price, the emerging markets, what it looks like. Let's look at the report. So the report's about 56 slides. I only took away some highlights that I'm going to show you today. If you want to see the whole thing, feel free to reach out and I'll give it to you. But the first slide that I really like, the Chinese powerhouse is driven by dynamic metropolitan hubs. 2/3 of global patent applications in 2016. 47% of world VC funding in the first half of 2018. For the first time, China has overtaken the US in startups and fundraising. There's a lot of venture capital going on over there, right? So now I'm thinking like, well, if I ever, if I have ambitious goals and want to be a VC one of these days, should I go to China? Should I be investing in China? Should I get exposure there? Hard to say. I mean, there's 47%, but I don't know. Are they invested into like consumer software, enterprise software, or consumer hardware, enterprise hardware, etc.? AI, yeah. So,
Look at the top 20 funded AI.
Oh, yeah.
More half that is from China.
oh yeah, it's insane, man. You would love Crunchbase. Yeah, like I'm hearing that they have surveillance cameras that track their faces. There's videos on LinkedIn if you see students, like 50 students walking into a classroom, no teacher, all face recognition to see if they're present or not.
Wow, that's cool.
Yeah, and they could even scale that up to a point where, are you paying attention or not?
That's scary.
So that's how they could do that, right? That from a moral perspective is hard on the individual, right? Because you have Big Brother, and Big Brother's a lot smarter, right? Artificial Big Brother. But from an economic perspective, what does that do for your economy? You're going to create world-class human citizens that are like peak performance, or at least micromanaged performance. They're going to be sharper than ever, and that I don't know, man. That's the next wave I'll be competing with against, right? Because some people are kind of exiting, some people are starting. Just be aware that some people are connected with information. I wouldn't be where I am today if it wasn't the internet.
I have a question. What's a unicorn?
Oh, a unicorn is basically, I don't have the exact definition. I'd probably say billion-dollar up valuations of a company.
Oh.
So what happens is, how we trade in public markets? We typically trade billion-dollar companies already on average.
Yeah.
Or unless you're trading penny stocks, it's not really 1 billion.
Right.
But in the private markets that only a few hands could access, like VCs or accredited, not even accredited investors, but accredited investors could invest, but qualified investors, 5 million up, could really play. So they basically funded, the 5 million players, they funded to a point where this valuation, they start buying it at $1 billion. So let's say Uber right now, right? It's at 100 million. And we're all qualified investors managing hundreds of millions. Well, I'm going to be like, well, Uber's at 100 million. I'm going to put 500 million, right? And then you're like, no, I'm going to put 700 million. And we do it to a point where now it's at $1 billion.
Yeah.
Now it's a unicorn.
Okay.
So when it goes public, it's pretty much overvalued already. But a lot of people don't know that. That's why they buy stocks like NIO. You bought NIO when it went public.
Fitbit.
Yeah, Fitbit, GoPro.
Snapchat.
Yeah, so
Look at the
IPOs, I don't look at IPOs because I know the game. I know how the startup world works. I'd rather wait for the IPO to tank, and then I'll come in and take my trade. Right, like Yelp. So Yelp is a perfect example, though I'm having issues with the timing of that one. Yeah. But be aware, China is a powerhouse. VC funding in China is ramping up. Next slide. The Great Firewall has allowed China to forge its own path in terms of technology. And this is the super buzzword that I came across. China has developed a digital protectionism policy to prevent foreign competitors from jumping into the Chinese market and preserve its internet sovereignty. You know what? So what this tells me is that they're serious. You know, like let's say for example, I'm the U.S. and I got Facebook, Google, Amazon, and you know how we care so much about global trade and tariffs and all that, right? Well, digital trades are coming up, volume, price wise, and if your economy's not protected from the internet, there's this new cyber warfare, literally, right? And China's smart because they won't allow, you know, on the left side, Amazon, Google, Uber, Facebook, Apple, whatever, to penetrate their economy. Because if they did, then the margins go to the U.S. So they're smart enough to make Alibaba, Baidu their champions
Right.
in their economy to keep their margins in their economy,
That makes sense.
right? So I see that, you know, underdeveloped economies probably don't know this. So Africa is probably targeted, right? But little do they know down the road, probably Africa's margins as a country will be feeding USA and China, right? But it's all about who flies down to Africa first and do those handshakes. It's all about the deals.
Does
So
the Chinese government block the ones on the left?
yeah, yeah.
So you can't.
So
Google
Facebook,
down,
face, yeah. So like YouTube, there's no YouTube in China.
There's no Google. You can't use
No,
Google.
you
Yeah.
cannot use.
Oh, I didn't know
Yeah.
that.
Yeah.
If you have
So-
Google Mail, you cannot.
Yeah.
use it.
I didn't
So-
know that.
so-
On Facebook, you can't
You
access
can
it.
access in China and Facebook.
So if you look at how impactful these tech titans have been on our own economy in
Yeah.
the West, then you know there's going to be one in the East,
Wow. That's
right? And so if you want exposure to that, then it's going to be stuff like Alibaba, Baidu, which is publicly traded, JD's publicly traded, WeChat's publicly traded, and WeChat's probably their number one, biggest one.
That's interesting.
WeChat's probably 500, 400 billion right now. That's like half of Apple. Well, okay, not even, yeah. At this point, yeah. So very, very interesting stuff. Something to be aware of as a global investor, at least if you want to be a global investor. Do you have a question, Dinesh?
So, but like all the US companies still has a global market, right? Like if you take Google or
They have.
Facebook, while those companies limited to the China, like
Yeah.
they're not outside the China.
Yeah.
So the market cap would be very limited for
Yeah.
those companies.
Yeah. So that is one drawback about the Chinese tech titans. They don't have they don't really go outside of China, right? But we got, for the most part, we got
Not necessarily.
USA and Europe.
They are trying to get out.
They are. You know, we
Like Huawei, but it got blocked.
yeah.
You know?
So you know, we worked with some manufacturers or OEMs in China, and to make some watches and stuff at home. And we met the guy, built a relationship with the guy who's helping us make these watches, right? The wife and I. And what we learned is like, hey, you know, who's your big clients? And he said, well, one is you, but the bigger one is this person from Africa. That tells me something. They're doing deals with Africa, hard, right? And it's mostly the southern part of Africa. That town, is it Johannesburg?
Oh, something.
Yeah, that's where the economic activity is right now, right? So from a global perspective, the race for the deals is at the south of Africa. If there's economic activity there, I should probably look at commercial real estate in Africa. Though I don't even know anything about that or how to get exposure.
The way things are going, they're taking the farms away from all the whites, and that's what they did in Rhodesia.
Mhm.
Became Zimbabwe, and the whole place tanked.
Yeah,
So
yeah.
that, in the long run, it may not be so good.
Yeah, but I think with the higher infrastructure, long run, it has to like get better somehow. Yeah, that's what it looks like. And,
I'm curious, you mentioned real estate quite a bit, you look at REITs.
yeah, we did. At one point, we were looking at telecom towers because that was quite the performer, and then we looked at data center REITs, right? I haven't looked at it lately because I've been more excited about software and stuff.
Where's the data coming in China versus the US? I mean,
Say, what's the what?
like a data center. I mean,
Oh, who are the data center
Yeah.
leaders? Alibaba. They have is it Ali Cloud or Alibaba Cloud? I forgot the name of it. The other one's probably WeChat. Baidu is probably the search engine of China. So
What's the Amazon Web Services equivalent in China?
probably Alibaba.
Oh, okay.
Yeah, that's why they're like one of the biggest ones. Now you could easily look that up through a Gartner report, right? So let's say data center, Gartner 2018, and you'll see AWS, Azure, and all that. But then you'll also see, let's just pull up a random picture, so because I don't want to waste time looking through all of them. So Alibaba should be on there. So this one, I need to see the name. This one is infrastructure managed. No, that's not what I'm looking for. Nope, not that one. Nope. Let's do data center. Let's do cloud giants. Because AWS is up there. Okay, here we go. Alibaba Cloud. AWS, Azure, Google. So what does Google have for a cloud? Anyone know?
Just like AWS.
They have Google Cloud. I see the building, right?
Yeah.
Yeah.
No,
Yeah,
just
so
like they are offering public cloud. So
I
everybody
see.
can host their infrastructure and run the service.
yeah, so the Chinese essential is Alibaba. So I'm bullish on Alibaba. And I do see a little bit of a turning point right now. But still, there's a little bit of a global macro uncertainty to kind of go all in. But you know, you don't want to miss the trades. So break of the 100-day moving average, 50-day moving average. Now testing 200-day moving average, but also at resistance right here. So a decent breakout is probably coming for this one.
Google has their results on Monday, by the way.
Yeah. So I just want to answer some questions online here before I forget. Google Cloud Platform currently number 3 after AWS and Azure. Yes. About us. Okay, they're talking about something else. Okay. So yeah, that's what I'm seeing right there. Any questions on this one? The Great Chinese Firewall. It's pretty smart. I mean, it's definitely history repeating itself, right? Why did they build the Great Chinese Wall?
What about those like Workday?
That instinct, that natural instinct is coming back, but in a digital form. Say again?
We have like the Workday and CRM. Do we have that kind of thing in China?
Yeah, I know, right? Like I would think Salesforce would have penetration in China, but now I don't even know. For the most part, Salesforce is penetrating in Europe, for sure.
Well, I mean, my question to that, does China company that's kind of similar company doing the same similar stuff like Workday there?
Yeah.
and
So
CRM?
I'll tell you this: if they did, I'd be on it already. So I don't even know now. But those are serious infrastructure that I want to be invested in because I perceive substantial upside. Maybe this VC funded, you know. Like yeah, it's China sovereign owned, but American investor. But I just don't have that. I'm not qualified, man. I'm not a $5 million player. China is very aware of the internet sovereignty. Therefore, the internet infrastructure companies of the West have not penetrated in the East. This means companies like Tencent and Alibaba need to be watched, right? That's why we're bringing it up today. Here's another one. WeChat is the largest community of users and consumers in Asia. In only 7 years, WeChat has become a key player on the global tech scene. And we're going to talk about how is it that they're so influential in an average person's day. Because the slides go through it. It's pretty interesting. But for the most part, they have about 1 billion monthly active users. Facebook has 2.2.
Are they traded in the US?
They are, no, it's ADR. So American Depository Receipt. So you could tap into that security. You could trade it. But the way it works is basically the bank, the USA bank will buy the shares there and then issue American style shares.
Okay,
to
but
us.
that is an ADR.
Yeah, you could buy it. So I showed you guys the chart earlier. It's down 50% on the year, but it's a lot higher now. So this is what the current price of Tencent looks like, right? So
Also, is it Tencent then?
yeah, this is Tencent right here.
So WeChat is owned by Tencent?
Yeah, Tencent Holdings is owned by WeChat. I'm sorry, the other way. WeChat is owned by Tencent Holdings.
So it's going back up again.
Yeah, so the previous emerging market dip was a great, awesome buy. I still think it's an awesome consideration, educational purposes only. Not bad.
For Tencent, another famous product is Fortnite. So like if you have heard like games, a lot of games.
Yeah, they're big on games.
So Fortnite is also owned by Tencent.
Yeah.
Fortnite's a big game.
So be aware of this, okay? This number is very important, right? Because if you think about Facebook here in the USA, they don't have the impact that 1 billion users do in China. Meaning, we don't log into one app, guys, here in the USA. We want to do something, we jump to PayPal, we jump to Facebook. It's a mess. And this thing, they focus on that. And I'll skip ahead a little bit right here. This is what they show, right? WeChat is leading the super app revolution in Asia. So SK, I know you're online. This is something you probably geek out to. From what I'm seeing in the US, our phone, this is what it looks like, right? We have a bunch of apps, but in China, it's just one. And this is a lot more economically efficient. So I do perceive that there will be some, mobile application consolidation happening in the West.
Interesting.
Right, because I was in San Diego. I'm trying to use a Lime scooter, but then I see a Bird scooter, and then like some other Uber bike or whatever. I'm like, which one should I use? I got to download each app. Now it's gonna flood my app screen, right? So it's not really too efficient for me as an end user consumer, right? So 3 main ingredients of a super app: a unique access point, right? 2 is seamlessly integrated into the ecosystem, which they got. And 3, its own payment solution. So these would be the foundations of a super app. And I think, I think the only person that could probably develop a super app here in the USA, assuming that the governments don't come in and say, hey, you got a monopoly, is probably Facebook. All right, because if you scroll back up here, Facebook, Google, Facebook. Facebook's got it all. They got the install base. It's just whether can they sync it all up and be one super app. Because if that's the case, Facebook's going to go over $1 trillion, in my opinion.
Is that the result of buying those companies after they already existed?
Is there
In other words, WhatsApp and Messenger, they didn't develop them from scratch, they bought them?
Yeah, you acquire for growth. So I learned that personally from acquiring meetups, right? Like it took me a whole year to build 300 members in my meetup, but it only took me a minute to acquire a 400 member meetup.
The networking you buy it.
Yeah, you buy the network.
Okay.
So that's the same thing with small businesses, right? When we
So why did you want to have 300, the meetup, what is the whole point of getting through?
So it's my access to investors. You guys are basically investors, and if you guys like me or attend my meetups long enough, hopefully you like me. If I ever provide a service down the road, hey Kay, I want a piece of it.
As
Maybe.
an agent, if any of us want to sell home, we're the first one
Yeah.
asking.
I mean, yeah, that's true. That's true, but I
I
probably.
for a couple of years. Oh, guitar.
So that's the beauty of a network. So if here's wisdom, or from my own analysis, if you analyze stock earnings long enough, not earnings, but just income statements long enough, you're going to see that a major expense on any corporation, marketing. And what is marketing? My LinkedIn, I have 16,000 connections. One click of a button that I share something will touch like a couple thousand.
Yeah.
Sometimes, right? The recent one I shared hit like 12,000 people. So that's power. That's like, I want to combine that with marketing dollars, and you got some power right there. It's getting your information out. But at the same time, I understand that this is a weapon I have, and I got to use it kind of wisely, right? Almost like a superhero. So I don't want to abuse it. And the more I guess, age and gain more wisdom, I feel like I want to, the way I treat my audience or the people that attend my meetups is the way I want to be treated as well. So when I do pricing, if I offer a service, I want to offer something that's probably fair for both ends, where the economics, where I'm not just out there to take your margins. You know what I mean? So that's going back to what I said before. You could go out there and do deals, do sales, but there's a style to how you do business, right? And I'm kind of defining my style and how I like to run my business. So I want to do it in a respectable manner.
And you get repeat business too. It helps you and them.
Yeah, exactly. So that's where I see the economics, and I probably, I don't want to do something that people hate, right? So when you go out there and you ever go to like Disneyland, you're like $5 for a bottle of water. That's the style, the way they're doing business, right? The margins are insane on that bottle of water.
$10 for a corn door.
Yeah. So you probably went recently or something.
My friends.
Okay.
Really? $10?
Yeah. So I mean that's the issue with business today. It's the way people ask you for your margins, right? It's what? Yeah, exactly. So if you want that exposure, if you see someone getting a lot of money from consumers, like Apple, right, with their margins and increasing margins but decreasing expenses, you want to buy the stock because you're on that side now. It's a circle of life. It's a snake eating itself. So a nice chart to show us a relative comparison of how big WeChat's ecosystem is compared to other Western social platforms, right? Even though Facebook has twice the size of monthly active users, I do not feel a strong integration within our economy, meaning we still have to bounce around several applications to go to get our daily objectives out of the way. Right? I'm an economics guy. I'm an efficiency guy, and I think these are problems that could be fixed. And if it could be fixed, there's margin to be earned. There's business opportunity. This one, it's a lot. It's stats heavy. I'll just read the first stat just to kind of show you how parabolic or how much momentum is in this WeChat app. To reach 100 million users versus, okay, it took 433 days, a little bit over a year, to reach 100 million users compared to Facebook at 1,650 days. Here, if you want to take a picture, I'll give you the full one. I can send you the slide deck later. Other stats, 34% of total mobile network traffic in China versus 14% for Facebook in the USA. 92% penetration rate. Plus 1 million mini programs since the launch of 2017. So this is almost similar to the dollar platform, how WeChat is the platform that everyone's operating in China. And I hear it with the grown-ups that, the relatives who travel to China to do business. So I have an uncle and auntie who travels frequently to Shenzhen to do business, and they're always talking about how they're so compelled to download the app because everyone's using the app, and if they don't have the app, they feel disabled. They feel handicapped. So very, very fascinating observation.
Where's the other 66% of the mobile network? I mean, is it just divided among a bunch of little companies?
Yeah, they probably have that much market share. It's probably divided. I don't know too sure. The first stat demonstrates how parabolic this economic activity is compared to Facebook. Moving on to the next one. So what's inside WeChat? You guys are thinking, I know I had some people in here and saying, it's like WhatsApp. That's only like a small function, guys. It's WhatsApp, it's social, right? So you see the WhatsApp icon right here? So inside WeChat is WhatsApp, social like Instagram, Facebook, and Snapchat. There's a wallet like PayPal or Apple Pay, all built in.
Everyone in China uses that wallet.
Yeah.
Like I was in the airport for.
You're talking about WeChat or
WeChat.
Yeah.
And then every single person that I saw paying for stuff in the airport, they were using their WeChat.
Yeah. Yeah.
I was
You can do it in the US, so
Yeah.
then WeChat.
Yeah, but then nobody uses it.
Yeah.
Everyone still uses credit cards and cash, whereas everyone in China was using.
That's
WeChat.
that's why I'm saying they are.
No, they don't use credit cards.
No.
I gave them a credit card to pay for something.
They're like, no.
He dusted off his credit card machine, like, and then put my credit card in, where everyone was using their WeChat.
You're outdated over there, man.
Yeah.
So that's what I'm saying. There's I would argue I shouldn't say issue, but there's lagginess in our economy in terms of mobile adoption. Their economy is just hands down a lot quicker and moving at a faster pace.
Look at the high-speed train,
Exactly.
That's
So
the biggest.
so Jim Rogers is famous for saying that in the 1800s was it belonged to Europeans or London. 1900s belonged to the USA, and in the 2000s belonged to Asia. So the economic shift, the global economic shift, appears heavily in that direction. China's caught up pretty quick, and at this rate, it probably GDP-wise, it might be way better than the USA. So
We try to stop them, see what happens.
we try to stop.
Trying to slow down.
They're slowing down due to our own manipulation of the dollar rising.
Tariffs.
Yeah, but I think it's mainly the dollar rising, right? Because I don't know if you saw in the chat this week, but I was saying like after years of looking at charts from a philosophical perspective, don't correct me if I'm wrong. This is super speculative. It looks like the USA tried to take down China by raising the dollar value, by raising interest rates, right? Because that just like tanked their economy by 50% or 30% plus. So that's highly provocative to say. So it's just educational purposes. It's just like what if, right, behind the scenes, the politics and stuff.
Well, what you just said, the Federal Reserve looks like they're going to be stable now, so that's good for China.
Yeah. So then now us investors, we're the guys that are trying to make a buck here, right? We gotta have to figure out how to adapt. So that's what I'm saying. So besides the social, the chat, they got the wallet, the mini programs, right? And then the public services, such as are comparable, if any of you guys recognize these. And then third-party services like Amazon, Uber. It's all built into one app.
So we go back in time before WeChat. Did China have a whole hodgepodge of 10 of these independent apps?
Yes.
So if you were
yes.
to correlate that to the United
Yeah.
States, then
Yeah, so Tencent had QQ, which is like another messenger app. I'm not too sure about that. I think some people would speak better.
That's long, it's like 10 years ago.
Yeah, exactly. So 10 years ago, in 2011, Tencent went IPO. I'm sorry, not 2011, 1994? Is that a fair statement? I forget the date. We could look at it later, but they IPO'd at 11 billion market cap. Today they're at 500 billion.
so this is kind of a good thing, right? Simplify your life, one app for everything.
Yeah.
So in the United States, though,
We need that consolidation.
Was there some likely suspect to be able to pull together the whole world of mixed stuff into?
Yeah, so I just mentioned the likely suspect would probably be Facebook, but with the government regulation as of most recent, I don't think they're looking to consolidate. It's too risky.
So
Like,
all the
you're
regulation
gonna-
here stop
Yeah.
all these.
You're gonna if Facebook's gonna spend money to consolidate, right after that, government breaks you up.
The SEC would
So
even
you're just
love
wasting
that.
money.
It was
Yeah.
interesting.
Yeah, it's too much of
These
a
are not
it's
the
a
time we
monopoly,
let them
man.
do that.
Fast monopoly here, huh? Man, that stuff excites me. Dude, I love economics. Yeah. Hey, but most of all, I really enjoy you guys coming here. So it's what makes this this club fun for me. So essential functionalities that humans seem to need every day is basically these criteria, these functions. Moving to the next slide. We already looked at this, so I'll skip this one. But again, the essence or the fun of the thing to take away from here is the super app revolution. I think we need it. Right? Ask yourself, how many apps do you have on your phone? Be honest. You're all swiping like, oh my gosh. Yeah, so a lot of Chinese stocks to consider. This sounds like our Western mobile application market will soon consolidate as specific industry starts to mature. Below demonstrates the typical day of a WeChat user. So now we're going to the next segment. So with all this apps, you heading up? All right, see you, man. So with all these apps, it's a technical analysis DVD. Yeah, it's really good. Below demonstrates the typical day of the WeChat user. So how does it really influence them from a day to day, from morning till night? So in those slides, it shows you. So pay close attention to how integrated it is into their economy and the level of economic efficiency it brings from morning until night. Okay? Starting with slide number 1. There's 3 slides. Yeah, I'll make it bigger. Oh, let's zoom in right here. So a day in the life of, I can't pronounce this, but Xiaolei, right? Just a average person, powered by WeChat. Name, age is 32, professional, head of marketing in a furniture company. Description, she lives and works in Shanghai. She uses WeChat in the same way as a typical city resident. So 7 a.m., you wake up. She checks the weather on a mini program and sees the pollution rate is quite low today. Thankfully, there are a few bikes in front of the house, so she grabs one thanks to Mobike's integrated feature all through the app. So she orders a bicycle, right, through the app at 7 a.m. in the morning after checking the weather. By 8 a.m., she's at Starbucks. Now, Starbucks is intelligent. They integrate it well with the application, it seems. That's why, Bill Ackman's betting big on Starbucks. She needs her usual morning coffee, so she stops by Starbucks. The waiter invites her to subscribe to their new official account and uses the shake feature on the phone to get a free cupcake. She scans the QR code to immediately follow it and pays the same time thanks to WeChat Pay. So she just used quite a bit of function. She ordered something, right, and she paid for it, right, and she got a discount through that. Now, she goes to the office. She connects her WeChat to her computer. By 8:30 a.m., she arrives at work. She logs onto WeChat desktop, checks Beijing's last meeting debrief on the marketing group, and asks her colleagues a few questions about it, all through the app. Crazy, right? That's how we should probably be operating, right? I should be going home, connecting this, and then bam, all my information is there.
So wouldn't you expect Google/Android to be the amalgamator of all the crazy apps we have?
Yeah,
since they
but
own the device environment?
they're chasing a lot of markets. They're investing into the enterprise space as well. They're chasing the enterprise space, so I don't know. I don't know. China's already moving at the speed of light, it seems. The economics is there. It's clearly there. But we'll see. So the next slide, 11 a.m. Her client just informed her by private message on WeChat that he could not be present for their lunch. So she suggests to a group of friends to have a lunch in the French restaurant they all like. She sends them the link through the mini program, which is an app on the WeChat, so they can directly order from the menu before they arrive.
Wow.
So it's
Right? By 12:30 p.m., she orders like a Chinese Uber. It's called Didi, right? Is a little bit late and won't have time to go to the restaurant by bike, so she books a taxi directly from WeChat, thanks to Didi's native feature. Incredible, right?
So all AI integrated.
Yeah.
Everything, right?
That's really
Yep.
cool.
By 1 p.m., she arrives at the restaurant and gets her meal. 5 minutes after arrival, she pays the bill for everybody and asks her friends through a voice message to reimburse her via WeChat.
It's like a Venmo.
It's a Venmo,
Yeah.
right? She directly receives the money on her wallet. Now, Lunar New Year's is around the corner. They do red envelopes too, and it's evolved. I've seen like people in China send my wife some red envelopes. And I'm like, whoa.
Yeah.
Like,
What does that mean?
red envelopes like it's a tradition where we just give money to like,
Oh.
Oh,
Here,
red
Christmas,
packets.
Yeah. Christmas we buy present, but they give money.
Yeah,
Oh, I see.
yeah,
Okay.
yeah.
Gift card.
So by 5 p.m. she buys hiking clothes from JD.com, right, through the chat. So maybe JD is a stock that we should consider because it's their Amazon retail version, not Amazon AWS. It's their Chinese Amazon. It's where the Chinese go to experience that
JD.
Amazon.com, you know, right? Because we're like, ooh, the convenience of like 2-day shipping and all that. So guys, it's about to be 2 hours. I do apologize for extending this a little bit. We'll finish this out and then we'll call it a day. But you guys are welcome to leave anytime, okay? Don't feel like it's rude or anything. So through JD, and then before buying her flight ticket to Taiwan. Crazy, right? Unfortunately, her visa isn't up to date anymore, so she goes to on the public service native feature to get a new one. Government integration much, right? By 7 p.m., an alert informs her today that her nephew's birthday sends him a red envelope as a gift. She also takes the opportunity to also send one to her grandmother to thank her for the last weekend's lunch. Human life has significantly advanced, improved. Lifestyle is there. It's amazing, right? That's the beauty of economics. 9 p.m., coming back home, she posts pictures of her dinner on Moments, social media, restricting access to only her close friends. WeRun's notification informs her that she won the daily contest by having done 2,300 steps. It automatically donates 2 yuans to her charity. Day in the life, huh?
Very cool.
It's Now stories about homeless people asking for money through a QR code through a phone in China.
Oh, that's the first time.
Unbelievable.
That's the first time you heard? That's what I'm hearing.
Wow.
Yeah.
That's giving way too much of your life to one out.
Yeah.
If it's hacked, everything is gone.
That's a drawback on everything, technology, so.
Yeah, so human life has advanced significantly. It's
Yeah, but I
just
think this is a kind of a good thing. I mean, in a sense.
yeah.
Efficient. Very efficient.
You know, sovereigns are definitely fearful, right? They want to be invested in the next digital currency for sure, right? Because if sovereigns can't keep printing money to control their economy, what's the whole point? You know, if you can't control your people, what's the whole point of being a sovereign?
Which is why blockchain is so good.
Huh?
Which is why the potential
Yeah.
of blockchain is so good.
Yeah. I think at some point, you know, the governments around the world being so lagged as they are, maybe not all the governments, but at some point our infrastructure is going to develop so high that they can't say no to this digital next level advancement. And then the true governments will probably be big titan corporations like Google, Apple, Facebook, right? If they manage to stay up there and have that influence. That's super speculative comment I made, but just something to think about. So pattern recognition is the next part I want to show you, right? We were talking about how back then they had the Great Wall of China, and then today you got the Great Firewall of China. Well, this is the next slide here talks, in some way, you're going to see history repeats itself, right? So my question to you after showing you this is, do you see the pattern in life? History tends to repeat itself, but in different forms, right? Below is an example of how hunter-gatherer used to hunter-gatherer optimizes their resources. From a mobile application perspective, we were seeing the same. So I kind of revealed it to you already. But anyways, this is one of the slides that I found very interesting. On the left side, you have a buffalo, right? And the buffalo,
Oh, funny.
yeah, when you hunt the buffalo, or back then, they really optimize all the resources from the buffalo, right? So the muscle, right, becomes like jerky or something. The bones become knives. The stomach becomes buckets and cups and dishes. The hide becomes, I don't know, moccasins and stuff. Raw hide containers, shields, buckets, etc. Horns becomes cups and spoons, right? We did the same thing with the mobile phone. Let Apple deploy all the hardware. Now we come in around the corner with the software, right? Let the U.S. Postal Service develop the physical infrastructure, and Amazon comes in to build Amazon e-commerce, becoming the most successful company in the world now, right? So you got to be aware of the infrastructures out there. But the camera, WeChat Pay, right? Verification of your face or whatever. Accelerometer, shake feature to confirm or whatever. GPS, finding people nearby. Microphones, push to talk. Pedometer, I haven't heard of this, but WeRun, to check how many steps. Touchscreen, right? And ambient light sensors. Pretty interesting stuff. This is history repeating itself, but in a different form.
That's fascinating.
It's beautiful, right? Man, I geek out so hard at this stuff.
No, it's cool stuff.
Yeah, man,
Very cool.
it's real cool. Now, West versus East. In the West, we go to the App Store, download mobile app, delete the app or content to have more space. Open Mobike's app, create a user account, log in. Over there, open a WeChat account, launch the mini program, scan the bike, use the bike. One app, right? Really brings the convenience, the efficiency. Because most people don't think quantitatively, but if we're spending our time deciding what app, what to log in, that's time not spent researching or investing or bettering your lives. So now that these guys have more convenience in the billions of population, 2.2 billion, how much time are they unlocking at a net population level? They're probably unlocking years and years of time. And that years and years of time could go to AI development. If the government shifts the economy right, oh man, scary stuff, right? We're not talking about cyborgs, we're talking about intelligent human beings are being developed over there. It's a powerhouse of artificially grown human beings over there. Sorry, I sound so sci-fi today. Today's like a sci-fi
really
day.
interesting.
Now, pick your champions. WeChat picks up the best service provider. So a little key thing they do is that they understand the functional essence of an application, a super application. What they did really was just, to guarantee their win, I highlight here what they acquired. So for the ride app, the ride hailing or whatever, they invested about 115 million. That's how serious they are about Didi, right? And we can analyze all this in the Crunchbase. Over here, online shopping, JD.com, marketplace, they took 15% of the shares. So they have 15% interest in JD.com. Well, now it's like a further reinforcement of my consideration of investing in JD.com. Book hotels, 16%. Find information and read reviews about local small businesses. Tencent owns a fifth of this company, right? They raised 600 over here. They raised 600 million in a round led by Tencent to get access to the shared bike because they know it's essential to their ecosystem. This is one intelligent entity, or if not entity, intelligent group, and they're operating very, very, world-class like, in my opinion. A few more slides and we're done, okay, guys? 3 more. Ecosystem growth is the measure of real leaders and their best weapons. Tencent is not only a service provider, it's an ecosystem builder that reorganizes competition. Tencent picks out excellent startups and fosters these companies as its descendants to ensure a long-term domination over competition. And then if you look at the unicorns over here, number of unicorns backed, they backed quite a bit. So not only are they, world-class in what they own, their asset, their digital asset, lightweight, they funded most of the unicorns, meaning they banked on their VC investments. If anything, I would love to be part of the venture capital arm of Tencent. Tencent creates value by connecting to its ecosystem, the startup that it backs. So not only does it fund money, it'll be like, hey, all right, you got access to my network now too. Existing relationships already given to them.
I thought Alibaba was their competitor,
They are.
so they're putting money in anyway.
Yeah, so speaking of Alibaba, Alipay, 54% of the market share in China. So they are losing to Alipay in terms of payment. They have 54% compared to 40% in China, right? But for the most part, WeChat has 92% penetration. It's only a matter of time before, listening to that one talk in the airplane shuttle between, oh my gosh, I forgot the names now. That billionaire Chinese guy and, how could I forget his name?
Ma?
No, the other guy, the guy in Texas, the money manager. Kevin, oh my gosh, I forgot the name. Well, anyways, what was I gonna say? I forgot. Well, whatever. 92. Say again?
Like older guys.
Kyle Bass, there you go. That's his name. So in that conversation, they started revealing how the sovereign currently operates over there. Apparently, if you, as an entity, become too big, like a Google over here, the government, the sovereign, will acquire you. Yeah, pretty interesting stuff, right? And their reason is they literally said in the video is, are you Chinese? They didn't say that. Do you love China? Do you love your country? Then give us your equity, because that's the show of respect.
Wow.
Insane, right? And so that's why there's speculation around why Jack Ma stepped down from Alibaba. Who knows, right? But that guy, that Chinese guy, he's here in the U.S. He's in New York now, hiding out from Chinese assassins or whatever. Wow. But he's revealing all this stuff.
He would cooperate?
Yeah, well, he saw the corruption over there, the way they're just.
Yeah.
I mean, okay, sovereigns will come and go in terms of generation, right? It's just a matter of time before, like my country, right? Vietnam, they open up, or like South Korea. After some time, after 50 years or 100 years, that communists or whatever the current party, they're going to age out. And then the next generation who's more global minded will be, okay, this is probably better for my people. Assuming they're benevolent, right? So, you know.
Sometimes a big assumption, sometimes not.
Yeah. Interesting stuff. Last slide, okay, guys? And then we'll call it a day. The economic model. So what is the model WeChat? Very similar to this investment club, right? So below demonstrates how they accelerate their business model and monetize their install base. They launched the WeChat, build the user base, the audience, right? From there, they tap onto the other side, grow their B2B partnership. Because now they offer marketing services, similar to Facebook, nothing different. 95% of penetration rate in Malaysia. Crazy, huh? Well, anyways, with that being said, thanks for coming to number 104.
That was a fascinating discussion.
Yeah, I think we probably went a little too long for some people, but thanks so much for
No, it was good. It was
yeah.
good. It was interesting.
Yeah. I wish more people were here, though. Yeah.
Well, maybe the Super Bowl.
Yeah. That's true. Yeah, thanks so much, guys. Oh, yeah, so Bob has a CD on technical analysis he's going to pass around. Really nice of him to kind of mass produce that. Yeah. Yeah.
Thank you.
Hey, thanks so much, man.
Technical analysis,
Appreciate it.
it's like a huge book. And it goes through all the indicators and how they're calculated,
Oh,
how
thank
to
you.
use them and all kinds of stuff like
So
that.
much.
Hey, I came out with one left word.
I'll copy and bring it back for next week.
Yeah.
No,
Well, that way you can give it
Hey,
to
welcome, man.
Oh, yeah, that's fine.
Thanks.
Yeah, if you guys want to stick around, chit chat, feel
Yeah,
free. I'm just
I'm
gonna.
gonna show you the charts from the 87 one.
Me?
Yeah, I'll lay it out, yeah.
Okay. All right. People online, I'm gonna call it a day. It's a rainy day, but still a beautiful day. Man, I'm super pumped this week.
You have no one else today, huh?
No, I don't.
I'll bring more next week because there's a lot of people on here.
Hey, don't worry about it, man. Don't.
Well, the CDs, blank CDs.
Hey, thanks, man. Nice seeing you. Yeah. Feel pretty optimistic about life. Thanks, Liz.
So you think the real estate market maybe kind of stabilized now?
Yeah, I think for the most part, I saw the real estate market go sideways with Apple going down 36-40%. Santa Clara market, it just went sideways. So I said it like a few times already, but the issue, the other variable it seems is to be underlying population issue. So there's too much population that's holding up prices and not enough inventory, which is probably holding up prices as well. So for the most part, if central banks are behaving the way they are, I think real estate prices will go sideways or maybe even appreciate if the stock market starts moving up.
Yeah.
But for the most part, I don't even think it will depreciate that much.
Yeah.
Like let's say super worst case scenario, maybe 30%. But after.
I'll say 15 now.
Yeah.
Maybe.
Yeah, but then it's like, what's the point? Your livelihood is pretty important as well. So it still seems like a hot market for the most part. Yeah, it's the high quality workers that surround Apple, that lives around Apple, that keeps it up. All right. So with that being said, if I'm bullish on Workday, then I'm bullish on Pleasanton real estate.
Oh yeah.
Yeah.
Have a good day.
See you, Aaron. Yeah.
Are you gonna log out?
Yeah. People online, I'm gonna log out now, man. It's a nice day still, no matter what.
All right, thank you. I'll see you guys next week.
Hey, see you, man. Let's catch up soon.
Oh yeah, I want to see it too.
Oh, you want to see it? Okay. All right, guys, I'm gonna log out online. Thanks so much for coming. We'll reconnect next week, and hopefully we'll have some more interesting reports come out, so we could go to the next level. I really want to take this club to the next level. So talk soon. Thanks so much.
So you really think you'll hit? I think it's a big resistance to see what happens.
Yeah,
in 2 months.